That was such a great intro, too. Welcome to Discover Crypto, Blockchain Basement, where you can dig a little deeper on crypto and how the hell I unmute myself. Unbelievable. I got the most beautiful mullet today. I do look a little crazy. Okay, I am a little crazy. It is what it is. But welcome to the show, y'all. We have a very important day today because we have the FOMC live today. Bitcoin and altcoins are basically in purgatory as we're approaching this. We're expecting some major chaos on the markets here today. So we're going to be looking at where Bitcoin's sitting, where we expect to go actually from these federal rate choices. Really, it's kind of this purgatory moment for altcoins. We've given up a lot of recent gains in altcoins, and there's some pain to be had in the altcoin sector here. Solid GDP data, seemingly unaffecting. And the solid GDP data is basically wiping away these worries for concerns of recession, yet still the markets remain on edge. So we're going to take a look at that. I'm hoping it's a nothing burger. I like this. I like this outlook. Just leave it as a nothing burger and let us continue our pump nation here. Bitcoin is in an interesting place. But before I get into all that, make sure you are following me on Twitter here at Druth Crypto. There's your boy at Druth. We release lots of videos on my main channel, Blockchain Basement. This is Blockchain Basement right here. Go give it a follow. We release videos on deep dives in specific altcoin ecosystems. I go after the conversations of the Federal Reserve and what the heck they are doing. There's an underlying tone, an underlying reason why the interest rates in the United States have to come down. There's this fanfare going on of it's Jerome Powell versus Donald Trump and their political implications there within. And yes, a large contingent of the Federal Reserve lean on Democrat political scale. But there's a main underlying factor that's driving the interest rate cut expectations into the later part of this year. And I'll give you my expectations. If we get a nothing burger today, if we get a nothing burger in September, if we get a nothing burger in September when we're expecting to see interest rate cuts, because right now we are not. We are 96.9% expecting no rate cut in this meeting today. The next meeting after this, September, which is still leaning towards a 25 base point cut at 57.9%, but there is the dastardly possibility that we don't see an interest rate cut in September as well. Crazy times in the market. Welcome to the show here. What's up, Clips Craze Express? I can't believe I was on mute. Unbelievable. I was chatting with my boy here. I was chatting with my son right before the show went on. He's making sure that he can have his time after the show's done and hang out. We might go to the park. So what's up, Moxie, Abril, Dizzy Gang, Stevie Crypto? What is up? Oh no, all the peeps here. Handmade Lauti. Right on with that name. DeFi Crypto Nerd Drops. Make sure you're following DeFi Crypto Nerd Drops. They're working hard for you. Now, where is Bitcoin at? Where is the precious ground of which we build crypto ecosystems out from on at in terms of price? We are at right in between purgatory zone. The red zone above us, heavy sells, historic heavy sells in this current range that we're in right now. Indeed, we are still on a pretty delicious looking path for Bitcoin in general. If you're looking at it from a larger time frame, a larger perspective, this is a great little shelf to be building out for ourselves. We've just experienced some good entry points in the green box here. The CME the CME gap here, not the Fed tool, is sitting still at $114,500 up to $115,500. The crazy part about this situation for Bitcoin and this dastardly CME gap below us that I just want to see fill is you'd expect that this price action did indeed fill the CME gap. That's where things get a little bit sticky because the official CME value on Bitcoin is sitting at $1,000 higher than the spot price. This means that we actually have to drop $1,000 lower than we would expect to on the spot price to actually fill the CME gap, because the CME gap, again, shown in the same range here, 114.5 to 115.5, is way below where the CME value is at 118.6. So that's a little bit of aggravation here. This is why these two charts seem so different. This is the spot price, and the spot price is trading at $1,000 below the the CME price. So just some clarification there. I got a lot of questions. Why hasn't the CME officially hit yet? Why are you still worried about that CME gap? Because when you're looking at the chart, it makes sense that we'd already filled it, but no. The answer is no, we have not. Maybe today's market chaos and the nasty candles that I'm expecting to see just from the tone, the conversation, because every single Fed meeting, every single one ends up exactly like this. This is exactly what I'm expecting today. This is how it goes. So just prepare your portfolio.
Good afternoon.
And then up. So, and this is just massive liquidity grabs. I do want to go look at the liquidity landscape right now just to check and see what the likely locations of liquidity washouts would be here. So head on over, check out the liquidation heat map on Binance. I like looking at Binance liquidation heat maps more so than anything here and see where the magnets are. Let's see where we got. So we are getting kind of dangerously close to this, and this is a thick chunk of liquidity. Longs and shorts are starting to stack up right now. It is interesting to me to see the amount of leverage trading that's going on as we are just a few minutes, or rather, let's see how we got 52 minutes left until the FOMC meeting actually takes place, and we're seeing quite a bit of leverage positions here in both directions. Usually when these Fed meetings hit, they cut us up and down. So just for the love of God, be careful out there, folks, because these candles are about to get vicious. So now we got to look at really what's going on, the undertone. What are market participants thinking? Bitcoin and Ethereum and XRP slumping. U.S. interest rate decision nears. Crypto market slide 5.4% on Bitcoin. Really, it's been quite diminished. The aggravating thought that just went through my mind is that we are surrounded by bullish news articles. We're surrounded by all of this bullish outlook for Bitcoin and crypto, and yet the markets are slumping and sitting here. Where's the fear and greed even at? I think we're at like a 60 on the fear and greed index. We're completely flatline. As we're getting news, the White House crypto reports, tons of outlook for interest rate cuts. And the longer that the Federal Reserve holds back the gates of these interest rate cuts, the more powerful the upswing is going to be. I butchered your name. Of course, I butchered it. I'm sorry. Loudy. Can I call you Loudy? Can I call you Loudy? Hopefully you forgive me. I don't want to butcher your name again. Let me try again. Hamid Loudy. Did I do it the same? Now, we're sitting flatline in fear and greed. And really, it's a nice equilibrium to be finding in terms of the fear and greed index, given we are right in the midpoint, but the price is exploding to the upside. This is telling me we do have extension possibilities available in this cycle because of these structures washing out and getting rid of people's parabolic expectations. These structures that we've been running into, these shelves, they are very slow, drown out. This is a different type of bull market. And these moments where we kind of flatline, even remember this one, how long did this flatline last from the $62,000 explosion? And then we're waiting for those new all-time highs. We were stuck in this range for almost a year, 240 days. And we had that momentary flash down to 45K or 50K that really got the bears out of the woodwork. They're saying the market's over, and then you just move on to the next trading range. Trade war happens, good washout, and then we're right back up to the top of this. So I'm seeing a lot of strength in this market structure. And really, when we're zoomed in on the current shelf that we have, we've only been here for a short amount of time. So we're trying to build the support right at around 120K for the last 23 days here. It's a battle. Did I actually get it? Shout out to that. Shout out to that. Appreciate you. And shout out to Alexandra G. I see you out there. Appreciate all of your support, resharing the streams, liking the content, getting the information out to the people. That's what it's all about. So I'm feeling good. This range really doesn't scare me. The CME gap, it is but a scratch. Really, the larger thing that we got to ask ourselves is it up and to the right only, or are there momentary washouts? And what I actually see when I'm backed up in a viewpoint in Bitcoin like this is, honestly, a CME washout down to 112K makes a whole lot of sense. Tapping the top end of this previous range and then moving on up, just like we did. Look at this. It happens all the time, and it's so scary when we talk about the potentials of it happening before it happens. But these are situations that we see happen quite often in Bitcoin, where you'll build the range out, you get that washout to the downside, give you the velocity for the next range, and then you have to come back down, prove it as support, move on up. Would not be that crazy, honestly. Really wouldn't be that crazy to see it do it. Kind of 112 move, clear out that CME gap, and then all bets are off. Now, I do want to know what your sentiment is. Markets are very, very, I don't know-ish. There's a mixture of green and red across the landscape. Let me know down in the chat if you think the FOMC meeting is going to end up being a net positive or net negative for Bitcoin price today. I want to see what you guys think. Right now, it's anyone's game. We got Bitcoin slightly down, ETH slightly up, XRP slightly up, Link slightly down, Bonk well down, SPX well down. Some of the big memes shaving off, some of the Solana bigs here, SPX 6900 and Bonk are taking a larger haircut than most. And we do want to hop on over and see what the rest of the market is looking like right now. Currently, obviously, Bitcoin, $117,800. Any winners here? We got Curve Dow coming back from some haircuts it had to take recently. Curve Dow token at $1.02. That's great, right? Not great to see. This is like a freaking. It's almost, if it's not a stable coin, it looks like a stable coin, right? If it's not a stable coin, the price action makes it look like that. XDC, shout out to XDC holders. We got some love going on here. XDC, and this is one we've done deep dives on it years and years ago. It does have some interesting lore to XDC, which I always love me some good lore on an altcoin. Any good altcoin that I want to, speculate on, I want some thick lore on that. And XDC has definitely got that going for it. So setting up a decent chart structure in general. Sitting here at about 9 cents. So that's good on them. They're up on a down, kind of painful day. Good job. Pendle, monster of DeFi. Just moving on up here. I know we covered that major Pendle news yesterday. And Ethereum. Happy birthday, Ethereum, on its 10-year birthday today. Shout out to the ETH believers here. So now, Treasury Secretary Scott Bessent has come out and says that he does not expect the Federal Reserve to cut interest rates today. Thank you very much, Captain Obvious. We kind of knew this. Really, the reason why I wanted to bring these two up next to each other is because Scott Bessent is the leader of the Treasury and the leader of the side of monetary, policy in the United States that is so bullish on stable coins and the relationship of the U.S. government and Circle, right? Circle could absolutely be the next mechanism for Scott Bessent to print money from the Treasury, to buy Treasury debt with stable coins. This could be his angle here. Now, the relationship of these two situations here, the Federal Reserve and the Treasury, are, they should be working together. Right now, they seem on the outside to be putting out opposing viewpoints. You have, Trump's camp talking about, you need to cut interest rates. We've had a lot of interesting sound bits, and this is honestly terrifying. Seeing James Wynn, Garen saying rates are coming. This is how we know it's not happening, 100% not happening. But we saw snippets in the media of Trump when he went to visit Jerome Powell when the whole debacle was going on how much money the Federal Reserve is spending on its renovations. Trump had this interaction with Jerome Powell. Very, very interesting.
Like it's got a long way to go. Yes, sir. So,
are there things the chairman can say to you today that would make you back off some of the earlier criticism?
well, I'd love him to lower interest rates.
Kind of an aggressive little shrug there. Let's check it out. I mean, kind of an aggressive little, it's almost like that guy walking through the workout gym, just, knocking people over. A little bit of aggression there. Would love to see him lower interest rates and gives him a little slap on the back there. I do think that there's a larger thing at play here, which I would argue is this. The real reason the Federal Reserve has to lower interest rates is because they have $9.3 trillion in US government debt that is going to mature within the next year. At the current high interest rates, refinancing would crush our economy with sky high interest costs. The Fed must slash rates now and refinance cheap or face these deficits exploding. The Powell hand is forced. It's by all monetary measure, in my mind, he should be raising the rates. The reason that the government is forcing their hand into this interest rate cut environment is because of the $9 trillion in debt they have to refinance. And this is where it's a tough situation for Jerome Powell. It's a tough situation for, people across the United States where we've built out a system that's basically built upon debt. We have issuance of new debt via, treasury bond buybacks. We have quantitative easing. We have all these different mechanisms to basically print money, which has led to the dollar's buying power losing a massive amount of its abilities. Where now, the average dollar is down 99.6, 99.8% from inception. And you have to find new ways to find new liquidity. I do think that the real reason why we're going to see in the later part of this year these mega cuts is because of the $9 trillion in debt. You can have all the fanfare, all the political reasons you want to call this, Jerome Powell hates Trump, and here's why. But really, it's the whole system, Republican and Democrat, have built a system on debt, and now it needs to have chunks of it refinanced. And a lot of what needs to be refinanced was given out in emergency loan terms during the flu season and the banking crisis of 2023. So we've used the mechanisms available. Now we have to create new mechanisms. This is why the government seems to be so cozy to stable coins, in my opinion. Now, from this, there's a underlying reason why a lot of problems have happened in banks. It's because the value of commercial real estate is in free fall. This is absolutely crazy. Blackstone fire selling investment properties. They purchased a building for $515,000, paying over market price in 2022, now listed the same building for under $400,000. A loss of $115,000 in terms of fiat. But if you add the loss of buying power into the equation, you are down big. You are down. You use this 515. Now you're listing it for 400K. You're really losing. This is like buying it 20% higher, right? And still getting that level. Absolute bloodbath. Sold for 340K in 2005. This is absolutely insane. And this is why these banks, they teeter on the edge. My favorite graph I showed you yesterday is the unrealized losses that these banks are sitting on right now. And a large portion of the losses, the $500 billion that banks are underwater in the US currently, is due to the loss of value in commercial real estate and taking out loans, emergency loans on the valuations of the real estate being pre-COVID. That's the scam where these banks were actually able to approach the Fed, or the Fed approached the banks, vice versa, and said, hey, we're going to give you the value of the commercial real estate pre-pandemic in this emergency loan, and then you're going to have a much bigger purse in this loan to use. And guess what? They took advantage of it. They had to cut the program off because banks were screwing over the Fed so bad during the bank term funding program released in 2023 to get us out of that mess. So this is a house built of cards, and this is the real reason, in my opinion. Other people will argue, but this is the real reason why we're seeing this, kind of tit for tat between Jerome Powell and Donald Trump. GDP came out hot and good this morning, 3%. The left in absolute shambles. And I really, I understand the vitriol of calling it just the left that's on the other side, but there's a lot of financial nuance within this. So, you have to keep that in mind. Wait a minute. Hold on. Dizzy Gang bringing up people, still bringing up Shiba Inu. Where's Shib? Hold on. We got to ban some. I'm banning someone.
You are banned.
There we go. Now I'm just, maybe your shib bag will pump. Maybe your shib bag will pump. I had to give some red meat to the peanut gallery. I saw some people think that I permanently actually ban people with that ban hammer. So I just had to do it, just in case. You never know if that's going to be permanent or not. Now, the White House crypto report also coming out today. There's speculation that the White House crypto report does not include details about the strategic reserve. Honestly, what we see is posturing and excitement about seized Bitcoin. What we need to see is active buying from the US government, buying and transferring out assets for Bitcoin, not just celebrating the fact that they got some from criminal proceedings a few years ago. I want to see that buy pressure at 200,000 Bitcoin per year, adding up to 1 million Bitcoin purse for the United States to sit on for the next century. I'm talking economic absolute domination, baby. That's what I'm looking for out of this Bitcoin reserve, not some celebration about crypto that's already been had through criminal proceedings. There is so much more. And really, I would like to see a lot of movement from the gold market cap into Bitcoin, because you know what? We're supposedly sitting on the books. They counted as $10 billion worth of gold, right? $10 billion. Wow, that sounds like a lot. They value the gold that's supposedly in Fort Knox at $42 an ounce instead of the current $3,400 an ounce. Why in the world would they not revalue that gold purse from 42 an ounce to $3,400 an ounce, and instead of 10 billion, you're showing that you have $800 billion in the back room, and your loans, your problem with your deficit aren't that bad because you're sitting on, I got $1 trillion worth of gold. It's not that bad, right? Instead, they leave the value of gold at $10 billion. We never got the gold audit. I'll just leave it there. Now, unlike the government who didn't leave it there. Where's the gold? All right, now MicroStrategy bought another. This is why I Bitcoin, because it's provable how much Bitcoin the government will have when they do purchase it. It's provable how much Bitcoin these companies have when they purchase it. We can't get any proof that there is any gold in Fort Knox here in the US, right? Like, this is the type of stuff that just makes me I'm all in on crypto and Bitcoin. Now, MicroStrategy bought another 21,000 Bitcoin worth $2.5 billion at an average price of $117,200. Strategy now sits on 628,000 Bitcoin, $74 billion worth, with an average buying price of $73,000. That is absolute savagery. Strategy is nearing 1 million Bitcoin way before the government. Absolutely crazy. Oy vey. You may be doing that at me, but that's how I feel as well, as big boss. Oy vey. Where's the gold? I'm sorry to get upset. It's just, seems like a scam. +1 if it's a scam that gold's in Fort Knox, +2 if no. There's all the gold's there, Drew. Calm down. Let me know. Am I overreacting? I need to know. Yeah. Fort Knox is a black hole. Yeah. Now, the economic data not looking too bad, right? We got a great GDP print, 3% GDP consensus. Thought we were going to land at 2.3. Things are better than expected. Recession canceled. Even though they changed the definition of what a recession is in America, that doesn't matter. The headlines are what matter. ADP private payrolls rose by 104,000 in the month, reversing a loss of 23,000 in June. Wages rose 4.4%, outpacing inflation. Cheers to risk takers, entrepreneurs, and talented workers who show up every day to push this economy forward. You know what? And this economy is going to keep moving forward, but things will change. This is where it's like the cataclysmic prepper in me tells me that it's not going to be okay. But then the guy who's just seen government psyop us and change the narrative over and over again and take advantage of people's short attention spans and just keep the scam going, that's actually happened much more than I've seen justice in aggregate come to be major problem. What's up with Diddy? What's up with that? I'm going off. Okay, I'm getting off the rails. The Fort Knox thing really got me worked up. That really got me worked up. Now, as I said, it is Ethereum's birthday. When we talk about blockchains with long-term proven track records. Ethereum has been around for 10 years. It's consistently worked on upgrades. Yes, there's old wallets that got in very, very early, and those Ethereum whales, sometimes they wake up and they dump, right? But if you're a whale in some obscure layer one right now, let's say H bar ends up being number 2 right behind Bitcoin 8 years from now. Are you going to be apologizing for selling your 10-cent, 20-cent H bar for $100, right? Are you going to be apologizing, or are you going to be taking profits on a risky investment that you made years ago on the prospect that technology would keep moving forward and you reap the benefits years later? Who's the bad guy in that situation, right? Who's the bad guy in that situation? And TJ said it best. The biggest risk here is not being involved with this stuff. Absolutely crazy. So now Ethereum, yes, you've been around for 10 years. Yes, boo. Now things have changed a little bit for Ethereum. We've seen Base come out and essentially lay the groundwork to use a lot of what we know as Ethereum on an institutional level for very, very low transaction costs. And I see an old head. I see an old piece of American financial infrastructure now partnering up directly with Base. Coinbase put this out today. We're partnering up with Chase, JP Morgan Chase, mind you, to accelerate crypto adoption. Coming soon, Chase credit cards on Coinbase, redeem rewards points for USDC, and directly link Chase accounts directly to Coinbase. Now, this integration, ETH's been captured by Base. I don't think ETH failed. I think it's been captured. It's a prisoner of war. Now, JP Morgan, why I emphasize this partnership so much is because JP Morgan was right around 40% of all US capital a long time ago, 1895. JP Morgan Chase was and still is systemically important to the United States financial system. They're integrating directly with Coinbase. JP Morgan were in my opinion, the driving factor and a large part of the push that got us to where we are right now with the literal design of money and having a Federal Reserve. JP Morgan wanted out of the limelight in the financial collapse, the crisis of 1895. He didn't want to be blamed by the American people for all the financial woes that were going on as a private individual that just so happened to control 40% of all money on the planet in the US, right? So he pushed for the creation of the Federal Reserve, a third party, another veil for people to point at and be like, hey, you're the problem. No, you're the problem. Very, very crazy. When Powell talk, let's go back and check. I think we're about a half hour till Jerome Powell comes out, Mr. Pow, and gives us where are we at. We're at 31 minutes out. Where's the market? Let's check out where Bitcoin is. Let's zoom in because I'm crazy and I like them right where we are. Right where we left off. So we are still in equilibrium zone. And one thing that I did take as a note of slight concern is we had a good sell into that hopeful CME gap. We barely missed that CME gap, that little curly Q down there. And we got the bounce, the heavy buy action from that, as I was expecting. But we did not get a bounce that breached this heavy sell wall. We did not breach the heavy sell wall that basically I'm seeing end at around $120,200. So still in equilibrium land, still waiting on that announcement. We are 30 minutes out, so I'll let you know as that comes up. We'll make sure. I do believe we might start a new show or just bring Josh onto this. I'll check and oh yeah, we're going to be good because I'm going to have Joshua Jake on here very, very soon as well. And we're going to be watching the Federal Reserve live together here. I'm going to send him a quick message as well, just to let him know, because he's going to be going live with his massive following. Huge shout out. We got 3,200 people watching right now. Absolutely awesome. Really appreciate your guys' support. Really appreciate your guys' support. And if you're just getting in, my name's DeDruth. I work with a lot of the background, the research, the development here at Discover Crypto, and run my own show, Blockchain Basement, which me and Isaac work tirelessly on. So I'm just going to let him do. You can stream onto yours from this show. All right. Sent him the message. Hopefully he gets it. Now I might go shopping today. I might go shopping today on the altcoins, right? I want to see some deals. I want to see some deals coming across my desk right now. Let's see here. Mamo, nice. I'm going to keep this Mamo chart out. I'm going to see how cheap I can get some Mamo for. This is a DeFi AI agent out of the Coinbase incubation program set, and honestly stands a potential of being integrated into the Coinbase app directly as a AI agent doing DeFi for people on Coinbase. There you go. This is a deep one. I'm going to send, yes, you can. Anytime. Josh, it looks like he's going to be popping in here in a second. This Mamo project has the potential to be integrated directly into Coinbase app, used as an AI agent going in and out of DeFi pools for users, making DeFi seamless. It's going to be shilled to the absolute ever-loving moon if that is the case. And this is a similar situation of Coinbase incubation that I invested into with Morpho. I liken it to Morpho's price action potential. Morpho's not looking too bad today. We're like basically flatline today. I'll keep an eye on if I can get another deal on Morpho. Yeah, I know I have free Mamo if I claim it. I haven't claimed. I just want to buy a huge bag of it. I understand that. I got Mamo airdrop that I can go grab for holding Moonwell as well. And it's a whole consortium. Like all of these different things that we see. It's like this Coinbase app consortium and these incubation programs. They offer incentives. They offer fast tracks for certain projects to get integrated on Coinbase app. And Coinbase app is the second best place in the world for people getting into crypto. Binance is still number one. Coinbase is right on its heels. So when I see incubation programs like this going on, I get invested here. FOMC policy statement released at 2 p.m. Let's see. I'll go through virtuals on a big discount. Let's go check it out. I'm doing a little bit of shopping. I'm not going to lie here. Like, I don't think this market's done for. Pullbacks excite me. Let's go check out virtuals. Virtuals is a little easier of a AI play because it's like it's a building pad for a bunch of different AI agents. So it's not like I'm having to pick and choose an AI agent. All time, not looking too bad, actually. Because I've seen a lot of AI agents lose a lot of steam in this. I've seen a lot of AI agents lose their juice in this last range that we spent some time in. Virtual's actually held up pretty dang good. Now let's look at the 7-day. Definitely a rollback, 12% down on the month. I'll keep an eye on this too. These are the days like potential snap crashes. I like buying. All I talk about is Bitcoin. What are you talking about? Are you insane? Hold on.
You are banned!
Just so you know. Now, I think I talked about something other than Bitcoin today. I believe I did. It's all been a blur. I blanked out once we started talking about gold and Fort Knox, and it's just been chaos ever since. Let's go back to Ethereum, though. Let's go back to Ethereum. BlackRock buying 4.5 times more ETH than Bitcoin. This is info from an AI agent as well, AIXBT. 4.5 times more Ethereum being purchased than Bitcoin by BlackRock. ETF flows on ETH are up 1.5 billion versus Bitcoin, which had slight downtick. Whoa. Daily ETF buying 24 times higher than the new ETH supply, and exchange supply is hitting the lowest since 2016. Money isn't guessing, it's choosing. I love this AIXBT AI agent. This is something I've been watching since like $100,000 market cap. I do wonder what the chart on AIXBT is. And, I've seen a little bit of a shift from large language model AI agents in terms of like investments. Let's see here. So where's the market cap? So right at 127 or 100. Yeah, 127 mil. So yeah, I watch this one more so. I'm kind of fascinated by the realm of AI agents. It's really hard to pick one particular one that's going to go nuts. But I ain't lucky if I ain't getting at the fair. I don't get lucky if I ain't at the fair. So that being said, I'm watching these things. Shout out to AIXBT. Honestly, go give them a follow. Go give them a follow. It might be a human behind this. I don't even care. It's great data. AIXBT, a bunch, as you can see from the graph, it's not like hyper exciting in terms of monetary, but the info is good. Now, Hyperliquid and Ethereum are the best performing layer one coins in the past 90 days. Winners keep winning. This is very interesting to see Hyperliquid taking up this price performance spot over Ethereum. Ethereum's had a great month here. Bitcoin Cash, what? IP, XRP. Where's BNB though? Why is BNB left on here? Let's go look at BNB because BNB, Binance's native token here, is exploring new heights. I saw this bad boy pump into new heights, $860 per token. BNB ain't nothing to fade. This is a beautiful token graph. Parabolic action to the upside. Really, this daily graph, we saw that same sort of pattern. Look, you get like the pump, swoop down, the tramp up, pump down. I think we actually still got juice. I think we actually still have juice. And I really wouldn't, if we see, obviously we're going to be watching Jerome Powell here in a second, but if we see Jerome Powell hold off on interest rates, obviously we have the expectation he's holding off in July, but December, they're already expecting a 50 base point cut. December, they're already expecting a 50 base point cut. If they extend this and they hold interest rates in September, which is a total possibility, we're almost half and half. There is a larger expectation of a rate cut in September, but there's 42% of market participants thinking that there's no rate cut coming. If that actually plays out and they hold in September, December, we could see a whole base point. We could see an entire base point. We could see emergency level rate cuts in December, which is absolute chaos for altcoins risk markets. Yes, there'd be a big dip probably to begin with, but then everyone realizes that the Fed's cutting in an emergency manner and, printing is about to go parabolic. Get ready for that. That'd be absolutely ridiculous. I am going to, if someone in the chat can actually pull me the best live stream to keep up on the channel too, I want to keep it in the background. I have the Fed website here. Let's go to Fed FOMC live and see if I can get the actual government website. I just don't like sitting there in the government. This is it. This is where I'm at right now. It just makes me feel odd. I mean, I feel like I'm in the halls of Congress right now in a digital platform waiting for them. Give me some, maybe a YouTube out there. Now, this is Wolf of Wall Street, Scott Melker, and his thoughts on this JP Morgan Coinbase deal. I think this is worth some time paying attention to, especially the credit card point redemptions, direct bank to wallet connection through JP Morgan's secure API. Chase customers will be seamlessly linking their bank accounts to Coinbase wallets. Very specific landing point for a large amount of cash. This directs connection and mutual customers to be able to transact with confidence, security, and privacy as customers use from Chase here. So the thing about this that makes me really insanely bullish on Base is the amount of normies that are going to get access to Coinbase wallet. And then there's a DEX. There's a decentralized exchange within the Coinbase app. I know you were, Josh. I got to mess with you, man. Come on, man. I got to pick on. I feel weird if I'm not banning anyone during a show. Just so you guys know, anyone new to the channel, just get used to it. I ban at least someone. Me or Isaac is banning someone per show. But this amount of liquidity, opening up access to Coinbase having a direct decentralized exchange leaves a lot of upside for Base ecosystem plays. That is where I really feel like the best upside for me can be found in DeFi on Base. Finding because what we see is institutions, they're doing all their ETF buys, and a majority of these are being housed by Coinbase. But that opens up a degree of trust and a degree of usefulness, a degree of involvement from, institutional level players and smaller, market participants that I think is really going to expand. It's like a snowball effect. Once you see BlackRock's willing to keep their Coinbase Bitcoin there, once you see strategy, all these different mechanisms start to integrate with Coinbase, then it becomes really, really quite simple. In terms of, like, we got the DOJ gave the signal that they were going after Binance years ago. And then ever since then, you've seen Base roll out and all this capturing of Ethereum. And a lot of this is happening in the background. You just have to look at the writing on the wall to kind of get that vibe for it. Let's go back and check out here. I want to mute this site and then pull this bad boy up to catch this live. We're waiting for this. I don't think this one lists at 2:30, but I know we get it at 2 p.m. as well. So I'm going to keep snooping around for this. See, I know we got Josh coming in here probably in the next few minutes. I know he's driving around all over the place. Let's keep looking at stuff here. I got my man Dan. Gave me a shout out from yesterday's show. This was our conversation about Omni. It is a smaller market cap project. Just give me a shout out for looking at the project. I'm not sold on Omni. I understand that Coinbase, they listed it, and part of his argument here was interesting. I agree with you on the social interactions being down for Omni. Makes me a bit skeptical, but what makes me think that it's somewhat a solid project is that it listed on major exchanges, one of which is Coinbase. To that, I'd say I've seen Coinbase list a lot of really ridiculous stuff. I've seen Coinbase not list a lot of really reasonable stuff. I've seen Coinbase not list Constellation DAG for years. On the website, Coinbase Ventures is in the list of partnerships, which is bullish. You want Coinbase Ventures involvement. That's good. Coinbase doesn't just list anything. That's where I kind of push back. Recent spikes were based on news, which I understand news can definitely move the markets. I do want to look. You guys are bringing up, I can see the chat here, bringing up this KETA token, KTA. I know KETA was absolutely ripping pretty recently. This is the overall graph for KETA. Let's go to the 7-day. We are seeing a little bit of calm come to these charts, which, from your investor, you're like, no, I never want the charts to be calm. Sometimes I like calm charts so I can find good entry points here. This is on the month. We're at $1. God, and I was trying to be greedy getting this, lower price zone. I don't know if I'll be able to get it on KETA. Cut or not? No cut. Cut for sure. We should get a poll going on. You guys seem pretty cut on this. Pretty cut. Let's do it. I'll add a poll here. Cut or no cut? What do you say here? Cut or no cut? Cut or no cut today? I want to know. I want to know what you guys think. Boom. Start a poll. I want to know. Let's get some data. I mean, because the larger markets, I mean, they're really showing that we're not expecting any cuts. Like this CME tool has been pretty spot on, as well as Poly Market being spot on. I think in a hike. Ooh, I like that. Let's hike it. Let's relight this candle. Come on, man. Let's raise the interest rates so they have to refinance $10 trillion in debt and then really light this candle. Now, I like where your head's at. That would be absolutely chaos. Let's check back in on the markets as we're sitting here waiting for the FOMC to start. Currently still writhing, flopping, and groping around here. Didn't mean to draw that. At $117,800. This morning had that momentary little pump too. We had a really good, say half hour. We gained on Bitcoin, just about 1%, and then immediately gave it all back. And now we're sitting here trying to prove this as that pump move. Let's see here, 74% say no. Yeah, I like I should have put the option of raise the interest rates, do a hike. Let's light this candle. I like where your head's at, man. Let's light this candle. Start this party. Let's go back here. I want to make sure we're not missing the Fed meeting. We'll go snooping around here. And also, while I'm looking in the background, we do got to make sure we cover all pieces that have been happening because there's been a lot of news. Need to catch up on the news. Here it is from Cointelegraph. Kraken looking to raise that for $500 million at a $15 billion valuation. Maulers, this is a big move. They're going to plan on holding 43,000 Bitcoin after Tether adds 5,800 ahead of public listing. So they're starting out pretty hot and heavy. Mauler, 21 Capital, competitor to Strategy. They're coming out. They're trying to come out with over 43,000 Bitcoin strong beginning. Ethereum open interest dominance nears 40%. Your ETH dominance, a chaotic metric as it may be, I do feel like going and seeing ETH dominance right now. We have been building up a little bit of juice on ETH dominance. Good. So we're holding at the 12% mark. A great sign. Very, very strong bounce. And ETH really needed a hold where it did, because boy, howdy, that was, I mean, the lowest I think it's ever been, right? I mean, we were hitting extreme lows on ETH dominance down there at the 7% zone. We are at 12%. Now, it's just some key levels, some areas to keep an eye on in terms of where I expect a little turbulence on ETH dominance is at 14% and at 20%. 20% is kind of that old school spot. I have this marked on the graph just in case. If we hit ETH dominance at 20% in a $6 to $8 trillion market cap, oh my God, that would be absolute fireworks there. Would love to see that. A lot of people think that ETH dominance stands difficulties against Solana and Solana dominance. Let's go check that out in comparison. Solana dominance is very, very good. Very, very strong, but it's only at 2.5%. So it is much smaller than Ethereum, but the upward trajectory, but they got a whole long way to go. Long way to the top if you want to rock and roll and you want to fight with Ethereum dominance levels, because that is a tough sell. What is up, Josh? Hell yeah. Steven, man, Josh. Ethereum dominance, it's like easy to make fun of Ethereum, but it's been around for 10 years and it is honestly making a great comeback story right now. It is up from that bottom zone, and that was the lowest it had ever gotten. 72%. 72%. So he's cutting today. Throw a wrench in the market. He's WP. He's cutting today. Throw a wrench in the market. Do it. Do it, man. Do it. Unbelievable. What is up, Zachary Martin? Yeah, ETH is easy to fade until you're, looking down the barrel of face blistering gains in terms of ETH dominance on the rest of the market. I think a lot of this comes from stablecoin integrations. DeFi is going to be a major play this bull market. I really feel that way. And I take that, from not only what I want to see in the world, I want to see decentralized finance make it out to the rest of the planet, but I see a lot of regulatory posturing and preparations for a institutionally led DeFi decade. I talked about it last night in that terms. I still feel that way. A DeFi decade is likely, in my opinion. Man, cut or not. I'm not cutting the hair. I think someone asked me to cut my hair yesterday. Now the cut would be lit. We should see a rate cut right now. That would be lit. Where's XR people? Where's my XR people at? They're yelling at me always. Here's your precious token. $3.12. $185 billion market cap. Nothing to sneeze at. XRP stuck in a kind of limbo zone in the mid $2 for quite some time. And it has now made it out and is trying to prove the top end of this previous shelf as that support right at $3. Pretty damn important moment for XRP. The XR people, they need to expand the religion and make it larger so that they can never die. And imagination never dies. Right. So this is the structure here. It's actually a kind of an interesting moment from a TA perspective, trying to prove this old shelf at about $3 as that support zone. A thick shelf. You had that nice sell-off from that pump, and now you've been able to experience the velocity of the upswing. When you keep a ball underwater for long enough, it pumps up. Now we'll see if XRP can hold this level. XRP to $10 tonight, man. Woo! I have a rich chat. Have a rich chat. You know what? Chaotically enough, if XRP went to $10, I'd be really well off. Say, I get as much trash as I talk. I've been in crypto long enough. I still hold. I was like selling off. I sold as much as I could locate at the time. XRP like 70 cents. I bought it for like 17 cents a while ago. It was like March 2020. And I found a bag, offloaded it in this range, and I still have a bag. I found another bag that I forgot to get rid of. So I'm begrudgingly winning with you, you XRP people, you. And, It is what it is. I think XRP will probably get close to, if not double. I think that we'll be looking at $5 to $6 XRP. Just in general, like it's all ships rise with the tide, man. All ships rise with the tide. And the tide for altcoins is Ethereum. Bitcoin rises by its own. Bitcoin rises by its own. So, it fueled by hype, accurate DeFi crypto drops, but hype honestly gets things quite far. It's just from when I'm looking at something to invest in, I want it to have tangible potential to overhaul current systems. I want it to be a problem-solving investment. And you know what? I think XRP solved its little cross-border remittance payments problem is trying to solve. It's a stable coin. It's a stable coin. It's RLUSD, right? When is the Federal Reserve's decision? Very, very soon. Let's see. I'm going to go here. I'm going to make sure we got the most up-to-date information because they are coming out in about 8 minutes. So let's see and make sure we got this up for us. I hope we really get a big dip. I hope we really get a big dip today. That would honestly make me feel more comfortable seeing the CME fill, seeing that actually happen. And we finally get this dark cloud out from over our heads that the CME gap is right around the corner, because we've been sitting right over the CME gap for quite some time. It has been an aggravating thing to deal with in terms of trading. I would like that slate to just be kind of wiped clean. Just a quick view here. We are still waiting on the FOMC to go live. This is the FOMC, the Federal Reserve channel right here. So we're keeping that in the background. Got it on mute for the time being because there's no reason in having it up if they're not going live yet. But man, I hope we get some major pullbacks. BTC, no utility belongs down the sofa. I would love to find some Bitcoin with no utility in the middle of my sofa. We talk about things without utility. It's about what is the utility of currency derived from? It's derived from the idea that other market participants see it as valuable. And now market participants view Bitcoin as valuable because of the cost of energy and the intensive input that it takes to mine the Bitcoin, the finite amount, 21 million only ever going to be for Bitcoin, not the infinity move that dollars are making. And it is based and grounded in physics. So it's based and grounded in physics. When you combine those things, that's where it's getting this comparison, this relationship with gold, this interest from an institutional level. And that is simply put for you guys on the outside looking in, there might be some new interest in crypto. This is not live. Gone viral. I'll show you this is live. There you go. Gone viral 88414. You've just gone viral. So I'm waiting on this Fed decision here. Interesting times. I do assume he's going to have the same color. I think he wears like a purple tie. People are always arguing on what color of tie he has on. I think he just likes the color. I don't really think it means anything. And while we're waiting on this decision from the Federal Reserve to pump our bags, here is the scam of our current monetary situation that we lived through explained. I love this.
Holy shit. He's really good.
How did we go from fighting a revolution over a 2% tax on a breakfast beverage to what we pay today? We're taxed on money when we receive it, when we spend it, when we keep it, when we invest it, and even when we die with it. We commute to work to make that money in a car that is taxed again to register on roads we're already taxed to build, fueled by gas that is taxed even further, and through tolls that tax you again to maintain bridges and highways and tunnels that already have billions of taxpayer dollars allocated to them, and they're still falling apart. Then when you get to your office that is taxed to exist, in a corporation that is also taxed to do business, that almost certainly requires permits, which are another tax, you are paid a paycheck that the corporation must match another payroll tax on top of what they have to pay you. Then you go to a home of which you are taxed to own that we bought with money that the government already taxed us on. Oh, by the way, the more money you make and the more you pay in taxes warrants the government taking more and even higher percentages.
What a great deal, right? What a great deal. So as we're sitting here like waiting for our altcoins and Bitcoin to rip because of risk assets being hot again because the Federal Reserve's cutting interest rates, just keep all that information in mind, right? They pass on the taxes that they inflict on us, even beyond death, to our kin. Literally, if you add up all of our taxes, it probably comes out to about 60%. I can't even imagine what it comes out to be in the European Union countries with even higher tax brackets. It's absolutely insane. It disincentivizes upward growth if all you have to look forward to is bigger taxes. Like, think about the children, man. Think about how the kids are looking at this situation. Like, oh, I can't afford a house, and you're going to tax me to kingdom come on everything and anything that I do. Unbelievable here. So we're watching live. Oh, looks like we got Joshua Jake in the background here. Let's add him. Let's get him up here. Mr. Joshua, how you doing, dude?
Hey. How we doing, brother? It's
I'm
good
like-
to see you, man.
Yeah, man.
Chat, is it just me or is Drew looking like looks max, dude? He is getting toned, bro. That gym's looking good on you, man.
I'm thick. Okay. I am no fitness guru. I have a dad bod and I'm just embracing it. I think what you're seeing is the aura of me just embracing my dad bod. Okay.
You gotta enjoy it, man. I need to start embracing the sun because I feel like I'm looking more and more like a vampire every day.
It happens.
It happens, man. But I'm excited. This is gonna be super exciting. Everybody's been waiting for this FOMC meeting. Of course, if anybody doesn't know, that usually happens in about 30 minutes. I don't think it goes on at 2, but they will announce their interest rate decision here in 4 minutes while we're here live. And then ultimately, hopefully markets react in a very, very positive way. But give me the rundown, Drew. What's been happening today? What should people be excited for? And what are we looking ahead for on this FOMC meeting?
Absolutely. I think the biggest rundown here, Josh, obviously we're going to hear Jerome Powell kind of give reasons why you get droopy over there.
Dude, so chat says my mic needs Viagra. It definitely does.
These markets need Viagra, bro. They're
a little soft here today. I gotta cup it.
Well,
So
I encompass my thoughts on today's meeting and kind of why we need to see interest rate cuts. Essentially around the conversation of the near $10 trillion in U.S. government debt that is maturing in the next year. And
it's not that bad,
Yeah, so it's a little bit. If they don't refinance at lower interest rates, then you end up in a debt spiral.
I think
which
I have to
brings
ask
up-
ChatGPT a question about that. Actually,
Yeah.
what was that dollar amount?
9.3 trillion. Yeah.
Okay, so continue on. What I'm going to ask ChatGPT right now is how tall would a stack of ones be if you were to stack 9.3 trillion ones? I'm just curious. I'm just curious, but go ahead.
That's substantial. It's we're in a situation where monetary responsibility would incline the Federal Reserve to raise interest rates. But where we are is the amount of debt that's going to need to be refinanced is basically causing us to artificially lower the rates to refinance government debt into, and then start the process kind of back over again. So it's a continuation of the psyop of fiat currency Ponzi, but by all monetary intensive purposes, a responsible move would be to raise interest rates. But that's not the situation that we're in. We also have the dark horse of treasury yields exploding, which is causing higher mortgages. A lot of people are watching this Federal Reserve announcement today, and they're saying, hey, Jerome Powell's going to cut interest rates. That means I can go buy a house for a lower interest rate, right? The answer's wrong. No, you can't. Those interest rates on mortgages are actually following the treasury yield. And you're able to get 5+% on treasury yields, 30-year government notes. And that incentivizes more moving into treasuries outside of more competitive moves. Mortgages are having to be high to stay competitive with treasury yields. So that's what I see going on with that. Absolutely.
Yeah. Now, this is actually insane here. 'Cause we'll talk further into this as well because, there's actually a lot of interesting things on the private sector on why we should cut rates. But there's a debate on inflation. But I want to get chat's answer here. We're gonna take a chat. This is for you, chat. I want to see who wins here. If somebody gets this, actually no, because you guys are gonna immediately go Google this. But let's see. What is your guess, guys? If you were to stack $9.3 trillion worth of ones, how tall would a stack of ones be? Would it be larger than the Burj Khalifa, the tallest building in the world? Would it go to space? What do you guys think would happen if you stacked 9.3 trillion $1 bills straight up into the sky? I'm very curious to see what chat says. We have William here saying 2 miles. 2 miles. William, you're kind of close. William's kind of close here with
almost
2 miles.
2 miles. Are you serious?
Bro's going crazy. Millions of miles. Space. It will go to the moon. Well, here's the answer, guys. All of you are wrong. Except Webby. He Googled it. Webby is right. It is 2.5 times the
I
distance.
got
to
an
the
intro
moon.
video. No, wait. What'd you just say? 2.5. What?
You can go to the moon 2.6 times.
Jeez.
You can go to the moon 2.6 times. But what is this intro video? Is this being played by the Federal
Yeah,
Reserve?
this is the Federal Reserve
Oh, let's
intro
listen.
video. So let's I'll unmute this and let's get this playing here.
I don't hear sound. You're not sharing sound. Unmute. Oh, I'm
Directly
retarded.
accountable to Congress. The board consists of 7 members, or governors, who are nominated by the President of the United States and confirmed by the Senate. Governors are appointed for 14-year terms. The Board of Governors oversees and sets policy direction for the system, including 12 Federal Reserve banks located around the country, which take the pulse of the nation's economic health from a regional perspective. The 12 reserve banks represent different geographic regions or districts and were set up based on regional economic considerations. Although supervised by the Federal Reserve Board, the reserve banks operate independently in many respects.
So they have to introduce
Reserve
like,
banks
hey, we're
carry out
not
a
really
number of
connected.
core system
Don't
functions,
really. We're
such as
decentralized.
supervising
We're
and
like all over
examining
the
commercial
place.
banks and other financial institutions, enforcing compliance with federal consumer protection and fair lending laws, while promoting local community development and lending to depository institutions to ensure crucial liquidity in the financial system. They and the board also play a key role in another primary Fed function, fostering the safety and efficiency of our nation's payment systems, including distributing currency and coin to banks, operating electronic payment systems, and clearing our checks. In addition, the reserve banks act as the government's bank, providing services such as maintaining the Treasury Department's transaction account and issuing and redeeming U.S. government securities. They also act as a bank for banks by providing key financial services to banks, thrifts, and credit unions. The reserve banks also provide a wealth of information on conditions across the nation, information that is vital to formulating a national monetary policy that helps maintain a healthy U.S. economy and a stable financial system. The board and the reserve banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the Federal Reserve's actions, policies, and decision-making attuned to what's going on in American households, communities, and businesses, which are the foundation of our economy. The third key Fed entity is the Federal Open Market Committee,
Bitcoin dumping right now.
FOMC,
Yeah.
which brings together representatives from the
It's the
board and the
commercial.
reserve banks to consider the state of the U.S. economy and set a
And
course
clearly they
for our
announced
monetary
there's no
policy
cut rate. There's
in a
no
manner
cut.
that seeks to promote
No
an
cuts.
economy that works for all Americans. The 12-member FOMC establishes an appropriate position or stance for monetary policy.
I can't
to
fast
help
forward. I
move the
can't
economy
pull
towards
over.
2 essential mandates set for the Fed by Congress, promoting maximum employment and price stability. This occurs mainly through the FOMC's influence on interest rates and credit conditions, which can significantly impact financial conditions, including economic productivity and even spending and investment decisions by households, communities, and businesses. Working together, these 3 key
It's kind of
Fed
like AI
entities and the
generated.
unique Federal Reserve System structure established by Congress more than a century ago
It looks fake.
help promote
I know, I
conditions
like his
that sustain
eyebrows,
a
though.
strong, healthy, and sustainable economy. For more information on how the Fed functions, visit federalreserve.gov and click on About the Fed.
Interesting. And back to the show here. Well, let's get a live breakdown of the charts here. Let me go ahead and share my entire screen.
Yeah,
as
let's see
well.
what your charts are looking like right now.
We are plummeting in terms of you can pull it up as well. You have the
I'll pull mine down, pull yours up here.
there
we
you go. Boom. Absolutely plummeting off the announcements of Jerome Powell. This is on the minute time frame here. So no interest rate cut here, guys. Let me know if you believe that's good or bad in the comments right now. Are you a fan of Jerome Powell? Do you think Jerome Powell is too late Powell? We could figure out all of that as well. But yeah, you're looking at a drop from $118,050 here, Drew, all the way down to $117,400, and ETH breaking that 3,800. But this more than likely to me going to be a bit of a manipulation tactic. I mean, markets were pricing this in. This isn't anything new. So this could be a wipe, and there could be a good long position, little scalp if we do recover off this. But interesting that we're dumping off a no rate cut. I think everybody expected that. That wasn't breaking news.
It's how deep the pullback is what matters to me in this. And honestly, like that candle that we just witnessed over the last 5 minutes might indeed be the general reaction that we get out of this. We need to drop to 113K to fill that CME gap, Josh. That's the one that I'm hopeful to snag out of this. Clear that
Pull
CME
that
gap
up.
out of the way, you know. That's the thing is the CME gap is trading at a $1,000 premium. The CME futures $1,000 premium over spot markets right now.
Well,
So-
what's interesting to me, Drew, is that this wick perfectly came right back to it. So
Mhm.
this is what's interesting is this area not going to fill because institutions don't want it, which is very interesting because this right
Maybe
here
what they want
very
is-
bullish.
Look
Very
at
bullish.
my aggravation that I have out of the situation. Maybe they want to be instilling that kind of aggravation into traders or to people that are out there on the markets. Maybe they want to instill that fear of the CME gap,
Mhm.
never fill it, and leave that psyop so everyone's too afraid to fire off any longs as the bull market continues.
Yeah.
know? Right?
That's it's possible. It's possible. And actually, let me pull up the liquidations too, just to see where we're at today. It's I don't fade CME gaps. I think people that fade CME gaps are in for rude awakenings if they're not careful. We've seen it time and time again where these things do decide to fill. But Ethereum, by the way, Ethereum looks way stronger than Bitcoin, which is like very bullish for anybody that's wanting to see an alt season. The weekly time
Right.
frame, we're starting to see a ton stack up towards $4,000 on the 24-hour time frame. Bright yellow at 38.60. You do have some liquidity down here towards 37.40. But we're
Mhm.
now starting to definitely establish a range on the 24-hour time frame. So you want to see that consolidation. But for Bitcoin's a different story. Bitcoin, you still got that range, way more liquidity towards 116.
Mm.
You go to that monthly time frame, and all that liquidity. Wow, actually, this flipped here today. Dude, people are opening up shorts left and right, $120,000. But I'm even eyeing. If we lose that 114, there's so much value. There's a lot of volume right within that gap. I would not be shocked if we did come into that 113, 114 level and ate some of this liquidity. But we are starting to see very positive signs of more liquidity opening up above us, which is good.
Absolutely.
This is good.
And just so everyone knows, I see some people in the chat asking. We do have news of no rate cuts. So it has been announced. There's no rate cuts, but Bauman and Waller, this is from Benjamin Cowan, they did internally want to see the rate cuts. And I got to do something real quick for you, Josh. Something
You
real-
are banned!
Go. All right, there we go. I had to get Freedom Guy out there saying mullets are lame. Get out of here, man. Get out of here.
Banned.
Josh,
I've never
so
seen that. That got me.
we are I want to see what you're looking at in terms of liquidity, in terms of potential trades, because it does look like we're trying to bounce off this range. What are you seeing in terms of potential next trades? I know you've been trading ETH primarily.
Yeah, we had a beautiful $1,000 trade in the Discord last night. So
Right.
if you guys are
I
missing
saw
out on that,
I was like, shout out, because I'm sitting on the sidelines here. I'm glad that you're still, seeing some levels here, because I'm trying to get a little bit of calm in the waters here. But what are you seeing right now?
yeah. So right now, easy focus. So let's walk through this. We can do a full breakdown of this. And if everybody's coming in right now, make sure you guys hit that like button. We're less than 20 minutes away from Jerome Powell speaking, where he's going live at 2:30 p.m. We'll be covering the entire FOMC meeting for you guys every single day. So make sure you guys hit that like button. If you're on X, repost, and of course, share it if you're on YouTube. But the first thing I like to look for when I'm going to be entering a trade on the day is I like ranges. I'm a range trader. We like to scout ranges because we want to identify points of control and just trade between them. Short, long, look for those scalps. So what I'm going to be looking for is on the 24-hour time frame. On the 24-hour time frame, it is pretty difficult to want to enter a trade at this given moment. But what I would want to watch is either a pull towards 119K or a pull towards 116K. And I want to fill one of these liquidity levels. On the 12-hour time frame, we could get a little bit better of an idea of when we're getting closer to those ranges. But again, you can see on the 12-hour time frame, right between in a range. And if you're in the Discord, what do you do when you're in between a range for a trade? The answer is you do nothing. Okay, you got to be patient.
advice.
You got to wait. Exactly.
Good
So we want to
advice.
wait for that. We want to wait for we call it a liquidity sweep. We're the janitors. We're just there cleaning up all the liquidations from retailers getting absolutely floored. We want to see a sweep. So if we get a sweep live at 116, I'll give an example. 116.7, the 664 here. What I'm then going to want to do is look at your trading view, which we could just pull up on this left tab. And I want to start identifying on a smaller time frame points of confluence. I want to see things oversold. So let's go down to the 5-10 minute. I'll show you what I mean by that. So what I'm going to look for, if we come down towards that $116,000 range, and I don't know why my computer doesn't have all this. TradingView is interesting. If I use it on multiple computers, it like never saves my charts. I don't know why. If it's just me, maybe I'm a little slow.
You know, it might
It's
be the
all
werewolf
good.
in you that's up at 3 a.m. You're like clicking little buttons and you can barely see, you know.
That's probably it. That's probably it. So once we, and actually, sorry, I skipped a step. We actually want to identify your higher time frame key levels. We're going to go to the hourly and the 4 hours. So let's identify what a key level is. A key level is going to be an area of interest that hasn't necessarily been attained yet. So we're going to mark on the 1 hour, that is $123,000, which would have been, of course, the peak. On the 1 hour, we can even date back here for today's level at 118. And you could do this for most of your key levels. You're just identifying what are key levels on the market that haven't been hit yet. You can do this also on the 4 hour time frame. Now, why do you want to do this? Because if you're a scalp trader, what you want to identify is your high time frames, so you can go to low time frames and find possible reversals. That is what a scalp trader is doing. Scalp traders are usually looking to catch a very short time frame, long or short. A scalp trader doesn't buy and then hold for 3 days or hold for 10 days. The only time that happens is if you somehow, which I've done many times in the Discord, is you catch a trade at like a bottom and then like you just keep adjusting your stop loss. Exactly. Right. And you keep adjusting, you have a trailing stop, whatever it is, and you make and print all this money. So now that we've identified a lot of these key points, I'm going to go to the 4 hour as well. I want to identify this one right here. That's at $117,000. Now what I'm going to want to do is simply go to the 10, the 15, the 5 minute and start being patient here. But you want to start watching and identifying when this price becomes oversold or overextended. So in this case, again, you guys know what I said, we're in between a range. You're doing nothing right now. Your RSI is in the middle. Your stochastic's in the middle. The MACD does look like it's got a bit of a bull div taking place here, but it's not even technically a bull div because the price is moving in some momentum. We're in the middle of a range. So if you're entering right now, you're like at a 50-50 position. So what are the key levels I'm identifying that I'm watching for right now, Drew? It's very simple. I want to see either a push up to 119,000 or a drop down to 116,000. And at either of those levels, if the price goes higher, I'm going to probably look for a short time frame reversal short. If it goes lower, I'm going to look for a short-term time frame reversal for a long. And that's what I'm identifying right now.
That's pretty, in my opinion, that's pretty darn wise. Like, you know, I'm kind of seeing the markets pretty range bound right now. Honestly, if I will go here and I'll make us a little bit bigger. So this has been our basic kind of ping pong, bing bong range. Frankie Candles gave me that one. This is ping pong and all kinds, like Frankie Candles used to say. This is a lot of selling action in the 1905 zone and a lot of buying action in general in the 1600, 116, 5. Now, the thing that worried me, Josh, is that we didn't get all the way down to 13K on Bitcoin. And when I looked at this structure a little bit earlier today, I did see just a kind of historic pattern that's played out a few times that would be a likely scenario for Bitcoin. Man, I got a lot of tabs open. It's taking a minute for it. But essentially, I'm watching out for a potential retest of this previous range high at $111,900. You have multiple spots where that tried to act as, well, it did act as heavy resistance here, tried to act as resistance again in July's, you know, blast off into our current range. And coming down to that range would make a lot of sense, because if you keep backing up and look at Bitcoin just from a larger perspective, this is kind of how we do things. We hop up above where we were stuck, and then we consolidate, and we consolidate down. We hit old range highs like this one back in March 11th, 2024. This was a high that was created at 74K. Then we came all the way down to exactly that point on the tariff trade war deal, and then popped up for again. So it's like we see this, I see this kind of market structure all the time. We get the little squiggles, a heavy sell-off, bam, hit that, little squiggles all the way down, bam, and then we're in our new range. So I've seen it repeat a few different times. It might be too soon for me to expect a similar action out of this tiny little range, because if you're really zoomed out on this, we've only been in this range for like 20 days. So,
well, and 20 days though is plenty. I mean, when you're looking at, if you want to pull up this chart here, the stochastic is now overextended. So, or the stochastic is. So when you see that stochastic overextended, you usually do see a pop not too far along afterwards. So even though it's been 20 days, it's very good to see that you're consolidating at 117,000, at 118,000, like in between this new level, because that's telling us that there is still strong demand. So if you're worried about, like, we could play the worst case scenario. We're in a bull run. Type 1 in chat if you think we're in a bull run. Type 2 in the chat if you think the bull run's over and we're about to enter a bear market. All right, 1 or 2. Are you a bull for 1, 2 for a bear? And let us know in the comments, because this, in my opinion, is very good. This market's nowhere near over. And you could look at your worst case scenarios for if there's somebody out there that's brand new to crypto. A lot of you might be new and you're going, okay, Drew, Josh, when do I buy? Well, if I'm looking to buy, again, I'll pull this up, and there's so much confluence to your chart, Drew. I love it. That $110,000 level would be, like, in my opinion, a dream to see that price drop all the way down to. And actually, what am I? This is the daily, because you're looking at the 110. There's not even really a liquidation level that's like you would. So if we break 114 and fill that gap, there might be like some flash cascade liquidation down to 107. Like because it's just such a powerful drop. But I don't know what would be the benefactor to pulling that price action back right now, especially when your stochastic's already overextended. Now, of course, the RSI, that momentum could start to drop. But as you see here, chat, what you're looking for in trading is just confluence. And all confluence means, for anybody that's new, is multiple indicators saying the same thing. Trading is all about probability. Anybody can become a trader. And as long as you start really using 10, 15, like, this is just how every trade does. You build your own strategies. If you have 10 out of 10 indicators saying, okay, if you look throughout history, 10 out of 10 times, the market bounces or does this, it's more than likely. It's never guaranteed, but you have a very high probability. You learn about this in algebra, etc., geometry. You have a very high probability that the price is going to move higher. And so looking at the stochastic, this gives me confidence that even if we don't see a new all-time high, we're more than likely at least going to see a retest of $120,000 to $121,000. And how do I get more confluence on this? Well, okay, you have the stochastic here. You could see that, back here when the price came down, the RSI did come back down to 50, but the stochastic was overextended. You have the MACD. You want to start seeing that MACD, that selling pressure, turn white. That will mean bears really start to lose. But we are seeing that. We can identify that quicker if we simply look at the liquidations. And when you look at the liquidation models, let's go to even the week. Let's go to the weekly here. The weekly, way more bullish than bearish. And so right now, there's a much higher probability the price is going to shoot back up to 121, 122 before we pull back. Now, that could switch within a week. Of course, that can switch. But that lets us look at these very key levels that me and Drew are pointing out, like on the CME gap, of this $110,000, $111,000 level, which historically, if you're trading Wyckoff, if you're trading, different accumulation or distribution phases, you like to see retests of previous highs, as it will it always not always confirms, but it will correlate to a nice strong rebound and a new price trend to the upside.
Yeah, and like we get lost because we're trading. We get lost in the 15-minute chart and what it's really doing, in the shorter term, which is great, because we're able to make more tether and get new spot bags, protecting those gains. The whole goal here in trading for me is to get rich slowly and protect the money quickly. Like, you have to think about it in that context. Josh brought up a really good concept where people will get into a trade on like 20x leverage and they're like, hey, if I never close this trade, I'm never gonna have to work again. Don't have that mindset, man, because you have to take your profits. A lot of people are scared that this is the top, and I have a lot of reasons why I don't feel like it's the top. But you know what? If you have a worry about your risk exposure, you probably need to deal with that, right? I would say that, like, if you're investing way too much, too much money that you're not willing to lose, then there it is. For me, how I approach crypto is that I don't trust my money in a bank. Literally, I just don't trust my money in a bank. I like having my control of my crypto on my Arculus cold storage device. We have links. It's a great partner for our channel. Arculus cold storage. These things are super easy to use. This is why I crypto, so if you have short-term worries, I can understand, de-risk. My biggest risk is not being involved with it. I am watching the Federal Reserve kind of YouTube channel here. Let's pull this up. So right here, we're still waiting on 2:30. About 10 minutes from now, it looks like Jerome Powell will be speaking. We'll get that good morning, good afternoon chaos come into the zone. It's just about how deep this market goes. I mean, we have had that initial reaction, but
if you want to switch it to entire screen, I know it's not as pretty to look at, but switch it. I would switch it to when he does go live, so we could pull up the trading view chart with it at the same time, so people can watch it on the minute chart.
absolutely. Yeah, I'm pretty sure I can do that.
We're all addicts here. I'm creating a new AA meeting for all of us in the Discord. If you're somebody that overtrades or uses way too high of leverage and knows you would be you'd be a better person if you simply didn't use high leverage and didn't overtrade. Say hi, I'm Joshua Jake. I'm an overtrader, and I'm working on it. So if you guys want to join that Discord, you can come do that with us in the link in the description below. But yeah, there's a lot of good trading opportunity up here. And, for people that are coming in, just so you guys know, there is so much more money to be made in this bull run. So even though we might talk about potential pullbacks, that's us identifying as people that have been in this space for 8 years, better opportunities to buy Bitcoin. For me, like right now is not the best time to buy Bitcoin. Why? Because me and Drew and it's easy and TJ just 3 months ago were screaming buy below 80K, buy below 60K, buy below 30K, buy at 15K. And so, this is a very healthy just to have a strategy, look at your historical data and go, all right, indicators are saying that this is a decent spot to buy Bitcoin, but it is possible it goes back to 111K. So I'm going to wait until all those indicators indicate I should dollar cost average. That is what we're doing here because, I'm sure if we took a poll, DZ, Drew, this is so new. I love streaming.
I got to shave my head. I'm DZ's uglier brother,
You just got to take it off. No, but one of the biggest mistakes people make in crypto is round tripping. So I'm going to raise my hand. Raise your hand in chat if you've round tripped bags before.
I round trip
too many times, right? You buy a crypto, it goes up to 3, 4, 5, 10, 100x, and you're like, I'm going to be a millionaire, and then you just hold that thing all the way back to zero because of your emotions. That is easily solvable by simply coming out with a risk strategy. If you come out with a strategy and say, all right, if I turn $1,000 into $3,000, I'm going to take $1,500 off the table because that pays off the debt. Or, some people might only have a few $100. It's a different conversation. Maybe you need to buy new tires for your car. Every single person watching is a completely different place financially and responsibly in their life. Some people are 18 years old and they can afford to lose all $300 that they have because they live with their parents. And that's great. That's fantastic. They take more risk. But someone that's 40 years old can't be probably taking on as much risk as an 18-year-old because they might have 2 or 3 kids that they're putting through school and have medical bills for. So just make sure that this time around for everybody, everybody's raising their hands in the chat here. You come up with a risk strategy to take profits this cycle. And that's all I got to say there. But we're now only 7 minutes away from this FOMC meeting, guys. So make sure you guys hit that like button, share, retweet. Hopefully Jerome Powell pumps the bags. I actually called this here right when we saw this manipulation tactic. We went down to, what was that, 3780, Drew, and we're already back up to 3815. Just ate a liquidity level. So you saw the blue line actually disappear because the liquidity was eaten. So what this generally means is that we're actually testing a major resistance level right now, and market makers are eating through it. And so you might come back down to this trend line, but if you were to enter a scalp position here, this is where people I don't trade ESQ. More than likely, they would look to open up a position. Let me pull this up right here. And they would just look for a long. So they'd put a stop loss probably somewhere right below the previous resistance and look to grab that scalp up to 38.32. Now, you never want to trade on a high news event cycle because Jerome Powell could come out and say good morning and markets will dump. He can come out and wear a purple tie and markets will pump. Let's not be degenerates here. This is gambling at that point. But this was a very easy call where we saw the manipulation. Saw a sell-off. Price was literally grabbed. That's a strong momentum-based indication that we just saw a liquidity sweep. Now market makers are going to push it out and wipe out all the longs that are on the market.
You'll have a lot of late
all the
longs.
shorts. All the shorts, my bad. I meant to say
you have late longs, you have early shorts, and the market makers, they hunt and destroy those. I am seeing a response in the chat a lot, in me, myself included. I round tripped Bitcoin. I round tripped Chainlink last cycle. So I round tripped some projects, but I think a real focus on this is something maybe we could do in later shows is different profit taking strategies, different signals that we're using, and the combination of there within to make sure that we're all kind of on the know on when those profit taking signals come up. Because I think that's going to be very, very important for people to understand as we go.
Yeah. Yeah. It's taking profits the most important thing people need to learn how to do in crypto because they just never do. And it's everybody would be better off. I ask this to chat all the time is like, how many people would have more money today if they just bought Bitcoin? I'm not a Bitcoin maximalist whatsoever. I'm addicted to the dopamine and the fun and the altcoin.
Yeah, but round tripping Bitcoin is like what's okay in my mind. It's like,
yeah,
that's actually what I aim for. Is I'm in altcoins literally just to get more Bitcoin to round trip cycle over cycle and just let the money printer just keep printing, and put all those profits into Bitcoin because there's no stop, there's no top to the M2 money supply. Where's the top to Bitcoin in that situation?
Yeah, exactly. And so, yeah, it's the hardest thing to do. And it's everybody loves to blame. They want like, you're the reason why, I never sold. It's like, no, you have to be responsible. You have to, every single individual is an individual human. Like we're all our own people. You have your own financials, you have your own life, you have your own debts, you have your own bills and responsibilities. You have to make sure that if you're going to invest, that's what doesn't make sense to me. Is like some people, like for example, I love making this as an example. People will buy XRP, like I'm never selling. Right. Why are you even investing then? Like, what's the purpose of it? You can't borrow and lend against your XRP. You could do it with Bitcoin. And I'm not trying
maybe
to make
someday they could. Maybe someday.
But what that's telling me is that they're literally just entering a speculative trade with no actual fundamental goal. And it's not wrong to just like have speculation on an asset, but any large financial institution or advisor will be like, okay, the first thing a financial advisor does when they sit down with you is go, what are your financial goals? That's like that's the first step into planning your financial like future. And it's very important. It's just very, very important because if you have no financial plan, you have no take profiting strategy, you have no dollar cost average, you have no guidelines in retrospect to really curate your investment, and you're just going to always end up losing more than you.
Yeah, and those like having that framework, I kind of like how you're bringing this up because there's going to be people that try to push that responsibility of when to buy, when to sell on others, and really, it's all about building your own thesis and your own levels that will change your life. You know what I mean? Like, why are you investing? What are you going after? And then when you finally hit that level, then it makes it way easier to pull that trigger. You know what I mean? And when you do that jeet and you sell, even if you sell the perfect project at the perfect top, you're going to feel like a total fool, and then it's going to keep going up and to the right forever. Don't feel bad selling altcoins and getting more Bitcoin, in my opinion. Like that is something I feel completely comfortable doing at all times. Maybe some of these altcoins are going to be around in 10 years and they'll be, instead of $20 avalanche, you'll be looking at $1,000, $2,000 avalanche. Who knows? Maybe that is the case. But for now, the landscape is very strong for Bitcoin. I feel more comfortable with it. I will check out and see where we're at in terms of the Federal Reserve in this meeting. We're not live yet. We're still waiting for it here. So this is live, and I will go live stream when it or widescreen when it does go there. But just don't get lost in the short-term charts too much. The vision here is pretty long-term. Now let's talk about some game theory, Josh. I was talking about this a little bit before you came on here. So the Fed CME showing obviously the clear intentions and the now proven no rate cut here in July's meeting. Now September, there is a 63% chance of a rate cut as things sit right now.
We'll get one in September.
You think one is happening in September?
Yeah.
Okay.
I think so. The reason for that so my original prediction back in, by the way, this was early 2024, was that we were going to get rate cuts in June of 2020. That's the only reason we didn't get the rate cut in June, in my perspective, is because of the 90-day delay on the tariffs. So you have July, August, September. So China's negotiation should be over by September. And with the way the current market is going, we could see the private sector struggling. That is where you're going to get the cut. And it's not going to be 50. I think it's going to be simply just 25 basis points. But I do believe we'll get the first 25 basis point cut in September, followed by one more.
And
That's
as
what I would
things
like to
sit, they look pretty similar to what you're talking about. As market participants are putting their bets in,
Are they live? I think?
October is looking at no base point cut, but then December is where the real chaos begins, Josh. There's
Jerome Powell's live, by the way.
Oh, let's go. Here we go. Let's share it. Boom. Unmute. Or no, unmute. Gotta unmute. Let's go.
Achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year.
Able to pull the chart up too.
Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June.
Markets are pretty flat.
Excluding the volatile food and energy categories, core PCE prices rose 2.7%.
Can you pull it up on the screen too?
These readings are little changed from the beginning of the year.
On my end, no. Could you just show your entire screen and then pull it up on your side, and then I'll run this and then let you take it.
Although the underlying composition of price changes has shifted, services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however,
there you go.
Most measures of longer-term
I'll pull this down. And see if I got your volume. Got your sound? Let's see if your sound is working here. Give us a +1 in the chat if your sound is working. Right. I don't think we got your sound, brother.
Okay.
I'll go back to mine.
You're good. Got it right here.
Our monetary policy actions are guided by our
All for a chart, chat.
All for a chart. We do this for you.
And inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
I feel like it's the same.
Thanks.
Always the same piece. Yeah.
There's a lot of lean in the markets and not
Right?
out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right. It's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still, a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Hi, Mr. Chairman.
Pushing back on September.
This morning, we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in.
Dump
You gotta look
in.
at the whole picture.
We
So
dump in.
certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But
I think we're going to get a long
if you look at
opportunity.
the labor market,
Mm.
what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing.
They're so out of
supply
touch.
workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable. Which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market?
So let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to slightly looser policy.
Just cut the interest rates.
Chair Powell,
He's going to go on and on. He's going to give us those pre-prepared clips,
inflation generating and price pass-through process. And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of 30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. Consumers it's
rolling over
in consumer prices, as you know, in the June report.
I could
We
show
expect to see more of that. And we know from surveys that
rolling over.
companies feel that they have every intention of putting this through to the consumer.
I got
but,
insane news.
The truth is, they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go. Exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic, expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't
Rome Daddy, chill.
I don't think, I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill,
Still nerds.
the adjectives. Do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals. And that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that. And it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say
Trying to get that political answer.
Visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work. And I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation, sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay. The other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too. So it's quite important for our economy, and certainly for the Fed's work and other government agencies' work that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
They want that political
that's
clip
more
so
from
bad.
Fox Business. How concerned are you with the data that we're showing coming in, showing no significant upward trend in inflation over the past 6 months, that the wait and see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait and see approach is
The
giving
wait and see approach. What do you mean by that?
for cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait and see approach.
Well, so
sort of
that that's where policy's restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying it's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance. What may be giving some companies will certainly be taking advantage of the fact of the tariffs and all the discussion of how they're going to. Companies will raise prices when and as they can, and you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often they'll cross the street in a group, if you know what I mean. That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some.
Big old dump.
Businesses will pay some of this. Retailers
Give
will
it
pay
to-
some of this. But we're just going to have to see it through.
We're going to open it
Just
long.
follow, if I could. Some additional tariffs have been in place since February, and things really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that?
No.
Well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer term rates, like treasury rates. It might be 30-year rates, it might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, and that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. And we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? It'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting, will it be dispositive of that? It's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like will some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down
I think
closer to 2?
We'll look at everything. It's as I mentioned, a pretty reasonable base case is that this will be a one-time price increase, and in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target.
So this goes back to the division of
Dude,
labor
this might
between the
be a
Fed and the
perfect call.
Treasury, as you I'm sure know, and the Treasury.
You see this?
Speaks to the dollar.
We're in.
It's not something that's been a topic of.
All right, let's see if this goes well.
Major discussion at all at the Fed. I won't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course, as you know, during the pandemic, we
Stop talking, Jerome.
looked at a whole lot of new kinds of data.
It was a perfect
people are
entry
looking at
point.
Big data sets that you can get from all sorts of places, and we do all of that. But we really need the government data. Really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that. But if
All right, we got a fair value gap at
we certainly hope that
37.30,
we get
37.37. I'm gonna hold this. Testing major resistance
Mr.
or
Chairman,
support.
Joe
This
O'Brien,
is support
ABC
rate.
News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Afternoon, Sir Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper income households. How do you see that evolving in the next few months? How much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had
Stop yapping, Jerome. We're good.
Just us had been
Hit
forecasting
the entry
it would
point.
slow down, and now maybe it finally has. So, I would say if you talk to credit card companies, for example, they will
Wait,
tell you
Bitcoin
that the
dropped below
consumer's in
116?
solid shape and that spending is at a
Oh, we're
healthy
still
level.
good.
It's not growing rapidly, but it's at a healthy level, and delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing, but so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true, and it was again right in line with what we expected. The GDP data that we got this week. So and I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting. Some of that can be affected by affect
We
consumers.
got to drop $2,000 more on Bitcoin to eat that liquidation or that CME gap up.
And there's no question.
Yeah,
that
I'm
it's
looking for a
slowed.
scalp here off a bounce.
And, we're
about
watching it closely, but
34%.
we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to.
Gonna be some good trades
to maximize.
And just to follow up on what my colleagues were asking about this sense, Governor Waller said that the labor
All right, we're gonna
market
do.
is on edge.
I got stopped
and He
out.
was pointing to
ya?
weaknesses on the private sector.
Oh yeah.
I was wondering, you said that
All
the main
good.
number to look
Entering
at
it
is the unemployment number overall. But what was the discussion about the state of the private jobs market?
People just need to stop talking.
So I'm not going to
We're
talk
not
about individuals.
Oh,
any
I mean, dude,
individual
overextended,
suppliers, we do that,
overextended,
but
and then I'm looking at.
look, I think what
I just
we
don't want to
know
interrupt,
is,
but
that
there's some really good trade
private sector
opportunities
job
here.
creation, certainly in the last report we'll see on Friday, but had come down a bit.
Yeah, new
And
E
if you
targets
take
pretty much just filled. This was the second target right here at 3680.
QCW,
It re-entered
adjustment,
again.
Seriously, it may be even low, maybe close to zero.
5% stop losses.
But the
Low
unemployment
leverage,
rate
guys. Low
is
leverage.
still-
Low leverage.
was still
Looking to catch a
low.
reversal.
So what that's telling you is that demand for workers is slowing, but so is the supply. So
We're
that's
back in on this.
It's in balance. Oddly enough, you've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that because of immigration policy, really, the flow into our labor forces is just a great deal slower, and those two things have slowed.
That's
more or less in tandem. If you look at things like I mentioned, quick
Catch it, it'll be 30%.
Look at wages. Wages are
RR
gradually
is
cooling.
huge.
Look at vacancies to unemployment. Those things have been pretty stable for. They haven't really moved a lot in a full year. So I think if you take the totality of the labor
Rome,
market
shut
data,
up.
You've got a solid labor market, but I think you have to see that there are downside risks. It's not. You don't see weakening in the labor.
The Trump crash out's going to be
I
epic.
think you've got.
Yeah,
downside
he's gonna
risks
hate
in a
it.
world where unemployment's being held down because both demand and
He's
supply
gonna
are
crash
down. I think it's worth paying close attention to it, and we are.
Keeps talking about. He's been talking about downside risks for like 6 months. There hasn't been any downside.
Hi, Chair Powell.
He's going to keep us on our edge of our seats.
Place. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Stop loss is at
Sure.
3660.
So, we have.
I think
we
we're in a
have
good
an economic go around where people talk about the economy, and then the next, and that's yesterday, and then today we have a monetary policy go around all the way around the table. Everyone gives their views. So the discussion around policy
ETH ate
was,
every liquidation.
the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that
You keep watching. I'll be right back.
and that they, for the reasons that they're going to express.
Yeah,
I
guys,
don't
I'll
wanna
break
tell
through it
you
all
that
in a
they-
second. I just don't want to
they'll,
interrupt, but this is getting
they'll
annoying.
issue some kind of a thing.
There's so many trades, right?
So-
This is the perfect trade right
so-
here.
But that's the story. And I would say, well argued, very thoughtfully argued all around the table, good arguments. And, it's a situation where, unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is. So that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering
Obviously,
rates right away?
Jesus.
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above.
Hey, when inflation's down, would you cut interest rates?
When we have risks to both goals, and one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal, so you have to. That means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, more.
Yeah, this is all
and that would be
basic.
somewhat lower than where we are now. No one knows exactly where that is. So that's the framework
Should've-
I think I'd be taking, and we'll just have to see. We're going to be
There's no hard questions here to answer.
Next cycle, it is.
They're asking what's your job at the Federal Reserve?
And we'll see where that takes us.
Inflation's high, they raise.
Taking the question, Jeff
Inflation's
Cox
low.
from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks, that the housing market is in fact weak. And the inflation numbers from GDP today came down 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be
Not going to answer that.
comfortable with cutting in, say, September.
He's not going to.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we
there you go, Josh.
is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in two directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not gonna say that.
Bro.
No,
This is so circular.
Why ask?
and
Why
it can go in many
fucking
different
ask?
directions. The inflation data and
I'm done.
and the
He's crashing out.
employment data.
He's gonna forget about his trade. It's all over with.
Data and
We gotta stop.
balance of risks analysis that I mentioned.
Thanks, Chair Powell. Greg Rock from MarketWatch. The Treasury
Josh.
Secretary has said recently
It's off
that,
camera.
it would be confusing for the markets if you stayed on as a governor after your term as chair.
Swear to
And
God, one
I
more
was
stupid
wondering
question.
if
I'm
you
breaking my
had any
monitor, dude.
Update for us on a decision.
We're up $650 right now, chat.
Sorry, I do not have any update for you.
Boom.
Thanks very much, everyone.
Thanks for all the worthless fucking questions, you stupid journalist. I'm fine. Fine. If inflation goes down and unemployment chuggles, will you cut interest rates? No fucking shit. That's his only job.
We've had multiple crash outs today. I crashed out earlier about the Federal Reserve or the Fort Knox gold.
Dude,
Here we are.
It's just repulsive. It's ask a real goddamn question, dude.
Yeah.
Be like, hey, you know, for the last 12 months, for the last 4 years, you were data driven. What made you decide to go on this political high horse over the last 4 months as you've been completely wrong about the direction of tariffs? Inflation has come down dramatically, and now the private sector is struggling. And while you say the unemployment market is at a good pace, there is less people being hired than ever, and no one is looking to expand. Why? Because fucking interest rates are too high. It's that simple. Just act like a human, dude. Why are housing mortgages too? We don't affect mortgages. What the fuck? You don't affect mortgages? You literally are the ones that said the broad market interest rate. Like, somebody just fucking ask a good question.
And
That
the
was
whole
a 30
question-
minute. I'm never getting that time back. I'm never getting that time back, dude.
Well, and think about it. Like, their goal is to have consistent inflation on your dollar. It means their goal is to make it constantly uncomfortable for you to be willing to hold dollars. They're making you stay in the economy, keep the velocity of the dollar going. And they don't ask any of the hard questions like, why is the interest rate high as we go into the need to refinance $10 trillion of debt? Are we ready to go into a debt spiral if we hold interest rates high? Are you going to extend this? Like, the longer they hold this back, Josh, this is why I'm really watching out for some pent up aggression on the markets, the risk markets in December. Like, yeah, we're going to have probably a rate cut in September, but if they do a 50 base point cut December, you know, even potentially September, that would be absolute chaos to break on the markets. And shout out to, I think it was Byron came in here and dropped 50 memberships. Shout out to you, man. I think we got a lot of comments here. Shout out to this.
Baby. Let's go. Dude, Byron, thank you so much. I'm sorry for the crash out, man. I'm just like, it's these are the easiest questions to ask. And it's like they just put the dumbest people possible in the room to make them look as politically accurate as possible. By the way, guys, we are up $700. I just moved my stop loss to $200. If we can stop out, we'll be one step closer to even. And I do apologize for not being able to break through that. I should have just cut it off. I just should have known they're just going to ask stupid questions the entire time. Why is nobody asking about sovereign wealth funds? Why is nobody asking about stable coins or tokenization? Why is nobody asking about, you know, actual real raw data of everyday Americans? Like, instead they're like, hey, based off your fucking principles and your Keynesian economic data, you know, dude, it's
the aggravating part about it too is that they were operating off of fake jobs data largely under the Biden administration. There's no way that the Fed didn't know they were using and working and making decisions off of falsified jobs data. And then they admitted, oh yeah, we were off by 1.3 million jobs a year after the fact, a year after they made all those economic decisions off of falsified data. And they say, no, there's no recession. They changed the definition of a recession. It's quite impressive the amount of gaslighting and psyop that the Federal Reserve can pull off on the American people just over the short amount of time of a few years. People's attention span, their memory span, very, very short. So, you know, seeing them pull off things like this, it aggravates you. It aggravates me. I understand why. What do you got?
Give a visual representation of this is. I'm giving you guys a visual representation of Powell's policy on interest rates and just where they should. Imagine this mic is the American people. That's it. That's all it is. He is fucking us. He is fucking us literally, Drew. It is crazy. It is all they care about. By the way, guess who pays off the fucking taxes for the government? The trillions of dollars. It's me and you. It's not the person building a $2.5 billion bullshit project so they can eat caviar while they talk about interest rates with all the rich fucking... I am so pissed today, man. I am so pissed. I can't take this anymore. It is
this
ridiculous.
is why we Bitcoin.
Look, and I'm not even like a giant pro-Trumper in this case. It is just the most obvious outlook on the market when the private sector is struggling, interest rates are coming, or inflation is down dramatically. Energy costs, all the energy division department, like all of the deregulation that's taking place, very bullish for markets. Of course, it's going to cause expansion. We just had a 3% on the quarter for Q2 for GDP growth. The expansion is going to be there. But guess what? inflation's not going to stop. And when they sit up there and they go, oh, we need to do this because it's moderate and we need to worry about the American class. Guys, none of this matters. You know, unless you're like actually actively looking to somehow invest in, you got to do so much research right now. We are fucked by these boomers, man. There's no way of coming out of this. But they're like, oh, we gotta pause interest rates to make sure the unemployment market's good. Dude, mortgage rates are the cost of government spending is going to continue to go higher and higher. They're going to print more and more money. And we're the ones that have to keep spending the dollar to pay off these taxes in the first place, or this debt in the first place. We're never going to get out of the cycle.
Ever. And that's the problem with where the data points that they're using to make these Federal Reserve decisions, they obscure. They use different inflation data that fits the narrative they want to make. They want to say inflation is getting better, it's getting less, there's less cost increase. They will take out certain goods that are exploding in cost and to kind of make those, numbers look a little bit better. And like the tariff conversation, I hope that we don't end up in a situation where we're absolutely hammering and making tons of money off tariffs, and then we're still hammering the American people for more of their money on top of it. Because originally, this country, the U.S., only had tariffs. We didn't have Internal Revenue Service. We are still, by and large, the biggest consumers of products made across the planet. That is undeniable. We are the biggest customers. And when you ask yourself what the most important part of manufacturing and sales is it the ability to produce something or the fact that someone's willing to pay for it? Americans are still willing to pay for these products. We're still integrally important into world.
I don't think we're willing. I think this is a very key.
Yeah.
I think no matter what, we're going to pay for and we can't do anything about it. It's my problem is with these politicians in today's world are just so out of touch with reality. It breaks me, man. It's, people are like, that's the problem I have with this. When they talk about inflation, like we can't cost massive, like the inflation's coming, they're spending. Donald Trump just passed a $5 billion spending bill. The only way to get out of this is growth. Because back to Drew's point, we used to be an entire nation based off tariffs. Then in 1913, a bunch of white dudes decided to get into a room, goon over each other, just circle jerk, and establish the Federal Reserve so they can control the entire money supply across the entire fucking globe. Now we're indebted to a giant loan shark and we can't break out of it. And if we were able to break out of it, you would know it because we put a 3% deficit spending limit on Congress. But since our politicians are so out of touch with reality and being just absolutely backed by APAC and foreign adversaries, dude, they have all of this money, all of this liquidity, and they have no relation to the everyday American anymore. And they're going to continue to do it. They're going to continue to spend. They're going to continue to inflate. And us, the American people, are going to be stuck with the bill when it comes to be paid for the. It's cyclical.
What you're saying is very passionate, but there is a lot of validity. There's a lot of things that go into my research that have driven me to being a crypto maxi, Bitcoin maximalish. I'm in altcoins to make more Bitcoin, is because there is no stop to this. We are in the zone where now Chase, JP Morgan, a systemically important bank that had a very specific hand in the creation of the Federal Reserve, is now getting interconnected with crypto. They're figuring out how to use it for their benefit. It's a very weird time for me as I see these, what would have moved the markets by 20%, the JP Morgan, Chase, Coinbase partnership this morning, really was a nothing burger. Markets did not care. They did not care that one of the most important banks in American finance is hooking up with the second largest exchange on the planet. And it's really left me to wonder, how much of this market is actually just going to be captured and controlled by TradFi? Is the Satoshi dream dead, or is it up to us to self-custody on our own, continue that decentralization hold of Bitcoin? Because I think spot Bitcoin is going to be the groundwork you need to operate off of over the next 20 or 30 years. That's kind of how things are going. Did you see the JP Morgan news integration with Coinbase earlier this morning?
I did not, but
it's a pretty big deal. JP Morgan, they've been developing Onyx blockchain for quite some time.
Yep.
And now we're seeing they did test transactions with that Ondo Chainlink transaction test. Now they're actually integrating with Coinbase as well. So, there's a lot of bullish things going on, but the price action is really not there. From an ethos standpoint, it makes me feel icky knowing that this system is basically just marrying, crypto, this freedom tool, hopefully we can keep the decentralization aspect of Bitcoin going. It's getting hairy. I think BlackRock is up to 600 plus thousand Bitcoin, right? So it's intense.
Yeah, it's the obvious answer. I mean, I gotta cool down a little. I just it's so aggravating when you're watching this guy for guys. I have watched every single FOMC, every single meeting though. I've paid attention to every single word that has came out of Jerome Powell's mouth. Every interview, every Swift conference, every what's the one in Austria?
Davos.
Davos, thank you. Every Davos conference, sat here and watched, listen, year after year, when people say it's not his fault, no, it's both of their fault. The administration's fault. But it's not just this administration's fault, it's all the previous administrations. It's the Federal Reserve's fault, right? The Federal Reserve is arbitrary. It's an artificial creation that was developed out of 1913 to control. It's a toxicity on the American free, like on global free market and trade. Now it's needed because the entire world, they're a loan shark. That is all this is. Guys, they work in with the IMF, with the World Bank. They're just one giant loan shark, and that loan shark can infinitely produce endless amount of dollars.
Right.
No one else on the world can control that. And now we're all indebted and controlled by these factions. That is what this is. This is why second and third world countries read economic, what is it? I'm spacing on it. It's why am I spacing on the book? Economic Confession by John Perkins. Forgetting about his name for a second. It goes over how China and the United States indebt second and third world nations and to creating what seems up front. A salesman pretty much comes to the door, goes, hey, we're going to give you $2 billion to build you dams and energy and power grids and do all these amazing things for your second and third world country so you can grow. That way your GDP can advance, so you can get in with the modern age. What they don't tell you is that the same people that are selling these loans aren't actually doing the research into, let's say, volcanic eruptions in South America. And all of these dams that are created off the $2 billion that they're indebted to China or the United States are now cracking and inactive and wiping out entire villages because they dammed up entire lakes that are completely restructuring the geographic communities that surround them. It is toxic. And so that's why I get aggravated with this, is it's like month after month, they try to come up with all this reasoning on why they're doing good, but that good always effectively just does more harm.
Well,
Warren
and I
Buffett
want
knows
to
it. Go ahead.
I want to address something that's part of this, because I saw this comment and it's a really good comment. The guy meant it to be negative towards me, but actually I've agreed with him this whole time. Where is this? It's basically, he was talking about, the system of crypto not being accepted in a regulatory framework way. And now that we have ETFs and this massive concentration of Bitcoin in BlackRock's hands, it really is, it makes me sad, because now I see all of the stable coins are probably going to be used by the Treasury to continue the extension, the lifespan of the fiat system. If you can have private stablecoin companies buying Treasury bonds, you extend the lifespan of a failing fiat currency for around 50 years, in my opinion. The system basically.
Power.
You're right.
Why do you think the market structure bill included that stablecoins have to be backed by UN?
100%.
UN, not gold, not Bitcoin, US dollar. You want to operate within the US without being structurally destroyed by political parties, you need to abide by their. And it's why we Bitcoin. This is the way out. This is your only answer. It's a fixed supply. There is no control, but even then there's control points on it. Like you said, Bitcoin's starting to be absorbed by major. Once that supply is controlled by all these, that's the problem about decentralization. This is why communism and socialism will never work throughout history, because humans by nature are going to work and operate within a bar. Let's say if you're hungry and need clothes, or if you're hungry and have clothes and you go to somebody that has no clothes and isn't hungry, you're going to trade them for food, for clothes. That is just that's how it works at the beginning of mankind. And so in these concepts that are created off decentralization is a myth. It's a masquerade, because with more money comes more power, and more power gives you more responsibility or more. And that's what happens to all these decentralized networks. A BlackRock that has $9 trillion can come in and take control of a system worth $100 at the snap of a. You can't beat it. And the same thing with the Fed. Same thing with any of these that are backing themselves by a dollar. Why? They could print endless money. How does an individual that can't print endless money control a narrative that is based off having more money? It's contradictive to, of course. So there's beauties to it. There's advancements to it. We're going to make money off it. We understand this is how it's going to expand. We understand global capitalism is never going to end. We understand that the barter system change. That's why we crypto. That's why we make money, because we're watching this, as Drew pointed out. I'll pull up the charts here in just a second. But tokenization is the future. Tokenization isn't a competitor to fractional banking. Tokenization is the solution to all the problems within fractional.
Right.
And it's going to be like injecting TRT directly to the Federal Reserve, give them even that much more power. Why the US dollar? Not going anywhere, because all that tokenization is going to be done and controlled by the feds first. They're going to be the first ones out of the gate with the tokenization. So it's a very interesting outlook on that 10, 20, 30-year time horizon. You now see Donald Trump coming after BRICS. Like there's a crackdown happening.
And the intent to print $10 trillion for AI and data center infrastructure. Like, we forget they're about to spend 10, 15 trillion dollars just in data centers and power generation for AI. Like,
You're going to know what you're buying, what you're selling. You guys
Right.
know this? Dude, satellites can see your phone screen. You think your passwords are safe? This is why you needed a hardware wallet and metal it, like literally engrave it into metal and bury that. It's security is a myth. Auditing firms are a lie. Where with every auditing firm comes a hacker that's better than that audit. Auditing firms are a way for, I don't need to get into insurance and I can go point to the like right now your focus should be how do you your value, your wealth much as possible, because they're going to continuously spend money to try to devaluate what you have, so you own nothing and you eventually are stuck being happy with renting your equipment, renting your appliances, living in an artificial apartment, renting your TV. Everything's going to be a subscription. Your apartment, your house is going to be a Netflix. Everything that you touch, if you do not start saving, researching, allocating, and focusing on storing that value of your wealth itself and understanding how to create value and store it back into another wealth factor, whether that's Bitcoin, whether it's gold, whether it's anything, you're going to be stuck renting and owning nothing. It is what Davos has said 101 for the last 15 to 20 years of you will own nothing and be happy. And it's a reality. Your phone device, you're watching ads 24/7 now. This right here, this is your enslavement to capitalism. You're stuck on, rather than going outside, rather than researching, rather than learning, you're stuck watching Netflix, stuck watching TikTok, you're stuck watching YouTube, and you're on this forever loop. Why? It gives you instant dopamine. That's not on purpose. Advertisement is all based off psychological thought process. They're going to figure out how can they create some psyche that keeps you hooked and doped up on that dopamine effect as much as possible. So you be a good boy and you go back to work, and you be a good boy and then you go back to work. And
Think
it's
about
this
where all
endless loop
commerce
and
is
cycle.
now too. They understand your data. They understand your products. They understand you better than you understand yourself. These are all concepts by Ural within, the you will own nothing and be happy crowd. You already mentioned them. I don't want to say exact names here. Last name Schwab. They've talked about the rollout of AI over the next 10 years, understanding the consumer, the human, better than they understand themselves, being able to basically surround any particular person with a slew of products that appeal to them. This is why data is so important to corporations and governments, is because they know how to extract more value out of you as a market participant, the more data they have on you. So this is where that shift into, because historically I was all about hard brass objects. If you know what I'm talking about, it's like a 2A here in the US, but also, kind of the prepper mindset, because I knew major changes were coming to the society. But now that I've seen a few years of this rollout, it's a collapse up, and data is the new oil. And so this is what we see is posturing from corporate government entities to take control of that data. Bitcoin is digital cyberspace, as Michael Saylor's making it clear. So that's why it's an easy play for me, markets. How's your trade doing, Josh? How are you doing in the trade?
Got up $878. We trade this, and I'll show what people why I entered this. So understanding all these principles, guys. You guys might actually really enjoy this. If you guys agree with a lot of things I'm saying, I trade based off liquidations. Why? What I look for in the market are points in areas of interest in the market that have the most amount of liquidity. I understand market makers and these capitalist corporations, they're going to do everything in their power to extract as much liquidity to produce the best fiduciary responsibility to their shareholder profit. So what I trade is just simple liquidations. And this is what I meant by a perfect trade. Some people were asking me, Yo, Josh, what do you mean of a perfect trade? I did not. I opened a long, guys. We got stopped out of the first one, caught literally the perfect bottom pretty second trade here. How did I do that? Well, what I do, and this is why I'm building FOMO. FOMO's a website that we're building over here, guys, that pretty much is going to be a dashboard for any of your favorite products or widgets. I want to bring this to Xbox and PlayStation. We're going to build some really cool paper trading games and stuff so you can learn how to trade for free and integrate all of this studios. But it's going to be very simple. Trading should never be hard. If trading is patience. Trading isn't difficult. Trading is taking multiple indicators and learning over a time span of 3-4 years and watching how markets react to. So what do I do with this heat? This heat map's very simple. The brighter the color, the more money is there. And just like a bug, just like an annoying fly, just like an annoying little gnat or mosquito that you want to slap off you, that is your market maker. Market makers are going to pull that price towards the light as much as possible. Doesn't mean bugs don't always go towards the light, but 8 out of 9 times they're going to be pulled to that light, right? They're attracted to it. The reason for this is if they actually get the price move towards this region of liquidity, they're going to destroy as many stop losses, take profits, and liquidations as possible. Because market makers guess what, guys? You get paid. The market maker makes more if you get stopped out of a position than you do if you get to take profit. That means they're inherently, like, whether you believe it's on purpose or not, they are inclined to try to stop out as many positions as possible because they're going to make way more off the field. That's not good. That's literally casino mechanics. That is you going into a casino, except with trading, you have way better odds because the strategy and all this stuff to it. But that is how market makers works. They want to drive the price, the max pain point on their chart, to liquidate as many positions as possible so they make the most amount of money. And they have a fiduciary responsibility as a shareholder to do so. That's why I trade liquidations. Based off every principle, you get all my ideation, everything as hear me speak into truth. That's how I trade. And so my perfect trading opportunity, I'll be quick here, Drew, just in like the next 30 seconds. On the 12-hour time frame, we were watching this live on stream, especially on Ethereum. Let's go to Ethereum. It's even better. Ethereum wiped out every point of liquidity below it. It's got still some below it. Doesn't mean we can't continue lower, right? At all. That doesn't mean that. But we saw a bright yellow line pop up at 37.87 and 38.53. Go to the 24-hour time frame. Guess what? Same thing. Liquidations all above you. Ate through this floor, got a flash wick, liquidated all these positions. We're now bouncing. We caught that exact bottom there. How did we do this? Well, I went to my other map right below it here on the daily time frame. I zoomed in. It's very simple, guys. If the green side is higher than the red side on the daily, you want to look for a scalp long. If red side's higher than the green side, you want to look for a scalp short. And right now, you can see if you look down here very closely, the green side on the near term, much higher than the red side, which inevitably simply means if you learn how to use these products that you're pretty much going to watch a short squeeze at least up to 37.35, if not even 37. That was 2 points of confluence. That was now 2 indicators telling me, okay, there's a buying opportunity. Then you go to your trading view, right? You pull up your trading view and came down to a liquidation level, bounced right off at 37.66 or 76, created a new one right above us. When you look at your indicators, RSI on the 3-minute, 1-minute, 5-minute, 10-minute, 15-minute, all were overextended. All were overextended. All were overextended. This is why you use multiple time frames. So if you went to the 1-minute, when I entered right here, right at the 1-minute, overextended, overextended, overextended. Go to the 2-minute, right? 2-minute, 3-minute. It's going to hopefully load here and not fry out my PC. See in a second. Again,
it's too much alpha. You're dropping too much alpha. And I love seeing the chat. They're having fun with FOMO and the entry points they're getting from it. Shout out to you guys. I like people learning just market mechanics. I like seeing it.
It's all it is. And this is why, like, when people tell you have to trade a certain way, you don't. Trading is like a language. Trading is something that you adapt to, that you learn over time. And for your first 2 to 3 years, or 1 to 2 years, you're probably not going to really make too much money. Maybe you hit it big, but you're going to make a lot of mistakes. But it's learning an entire new language and understanding that you're going to be looking for 10, 15 potential indications of, okay, these are all telling me, yes, we're going to see some upside before you enter, or yes, we're going to see downside before you enter. You can do this on the minute time frame, monthly time frame, the yearly time frame. And that's why we entered. So I had like 7 different areas, guys, and indicators telling me, all right, try to enter at the 37. The 37.19 was a huge support level. But I'll show you why I entered that first trade. If you go to the 4-hour time frame, look at that. It went to, actually, was it hourly? Hourly. There was a reason why I entered the 30. I think we were already overextended. Hourly. I think it was this right here. What at this point? little bit of support here. But we got that liquidation sweep at 200 moving average on the hourly. We're about to close back above of. And of course, now we're looking to be up about 900. So that's all it is, guys. Probability. It got stopped out once for about $400. We're now at $500 on the day. I can move my stop loss up to $400 now, break even, free trade. We're going to be in a win position for the day here. So
Nice moves. Love it, man. Love it. Love it. I love seeing the comments out here. Awesome chat. We had great viewership there. I mean, we peaked. We still have 6,172 people watching across all platforms. Huge shout out to everyone. Like this video. Share it out on whatever platform you are on currently. I think we're going out on X and YouTube as things sit right now. What a day, Josh. What a day, man. This is this, and you know what you did today is something I like to do in trading, where it's like you're putting those entries in on liquidation points. You find that pump right afterwards. You put your stop loss in a safe point, and then you're basically fishing for a giga trade. If you don't take those short-term profits, sometimes those things end up being 700-800% gains off of just leaning into a crazy day in the markets, a big pullback, leaning into the danger and taking action, man. You know, that is important. We can learn, we can talk about all the markets and the mechanics, but it's all about being able and willing and capable enough to take action when you see the opportunity. So huge shout out to that. Love seeing that live on the show here, and huge shout out to the chat. My boys next to me here eating a bunch of sweets. They went out and got some treats here because we had to stream and cover that. But no, so now we've seen the expectations. We've talked about the rest of the year. Josh, what is the likelihood that there is no rate cuts this year and Jerome Powell and the Federal Reserve forces the U.S. government to acknowledge the incoming debt they need to refinance, $10 trillion at the current interest rate? Do you think they're going to do it for political reasons, or would they pull back at a point? What do you think?
I think I've learned just to not trust the government or any of them. It's impossible to predict. The right thing would be to cut by 50 basis points. That's 225 basis. They actually care about America trying to afford a home. Look to see the private sector actually American job growth again within the United States. And I know this firsthand. I have family members that do they struggle to get jobs. Like, type 1 in chat, guys, if you know somebody that maybe lost their job within the last year and it's been incredibly difficult for them to find a new. That is where we're at. It's not about, again, it's about the American individual, because corporations are worried that interest rates are going to stay higher, and it's forcing the private sector to not borrow more money, which hurts American families more than it actually saves them. The inflation side is not a individual issue, the government issue. It's a government spending issue. It's why I get pissed off at this conversation every single time when they're like, oh, no, we're in a good spot. The economy's strong. Like, no, just tell the government to stop spending so we can lower interest rates. And hell, pass a law that just puts a 3% mortgage rate on individuals and keeps them away from institutions. Your BlackRocks and all these institutions can't come in and buy up the entire supply with cash and completely dwarf every single person just trying to live the American dream.
Right.
So what I have to say to that is simply, I think we get a 25 basis point minimum by the end of this. I would like to see 50, but based off the political diversion that we've seen grow, especially over the last 4 years, and more in retrospect since 2016 when Donald Trump got elected, I wouldn't be surprised if they held for just based off of whatever ideation. What, I don't know why they would, but we do need to see those cuts too. It's hurting American families day by day. So look at all the ones coming in chat too. Like, so many people know somebody lost their job. People are saying, "Oh, the job market's good, the economy's good," but why aren't people getting hired? It's because the companies that are letting go people aren't rehiring. They're cutting. They're cutting costs. And
the automation of things is also helping companies do so, right? I mean, think about AI integration, customer service roles, middleman positions that people are used to work in, getting jobs in those fields. Like, there's going to be a big shift in how you make money over the next 10, 20 years, especially. I think about these things in terms of my children. What are my children and their jobs going to look like in the long term? And these are things that I have to face right now and figure out a way to kind of navigate. I'd say learning how to leverage AI for your benefit, understanding the most likely industries to be left alone by AI for the longest amount of time. But really, I mean, AI systems like that, it's going to be going after most. Like, I saw an HVAC technician today. He got on his channel and he's like, guess what, guys? I put on these Ray-Bans and I looked at the model of HVAC system I had to fix. And I asked, my sunglasses how to fix that HVAC system. The Meta AI literally gave him the answer on how to fix that model's issue with its given symptoms in 30 seconds, right? So
Yeah,
when we talk about, oh, my industry's safe, AI can never do music, AI can never do graphic design. The answer is right in front of us. It is doing a lot of those things. We have to figure out a way to make money in a very fast way, a very fast way, in a big way, because things are going to get hairy. Your long is probably looking pretty good. I'm looking at the
Yeah, I want
markets.
to pull up this. You guys could.
There we
Yeah,
go.
we're up about $1,400 today, guys. So huge day. This comes after about $1,000 profit yesterday as well. So this will put us at almost $8,000.
Nice.
$1,000 to $10,000 challenge now if we close this out really positively. I think honestly, we caught the reversal. So our target's 3784. At that level will be $2,500. We might be completing for the fourth time in my career now the $1,000 to $10,000 challenge, guys, in that Discord. If you guys want to know where we do trades, I trade in there all day long. We trade there throughout our lives, Monday through Friday here. Discover Crypto has a morning show with DZ and TJ, an afternoon show with Drew, and then another afternoon show with myself. And you're going to constantly see trades and education all throughout the day. But if you want to actually get that raw information all day long, come join the Discord, where I go live periodically. Drew does as well as everybody in the Discover family. We're constantly trading and teaching you guys how to use the trade strategies in there. It's also where I trade on FOMO. FOMO is, again, that website product that I'm building out, guys. That's going to be all my dashboard tools, data sets, trading view, everything all integrated in one place. You can buy, sell, swap now. And of course, we're going to have our campaign system launched tomorrow, it's supposed to be out today, where any KOL will be able to go onto our campaign marketplace under community and start earning more money, or any users, anybody out there. If you guys want to produce content that's crypto related, you can start earning like $10 per 1,000 views. Like really, really starting to break into a new CPM category. So we teach how to use all these tools in the Discord. Make sure you guys come join for free in that Discord. And of course, this is our favorite news website as well. If you get crypto news, you guys should check this out. It's called FOMO.io. I do apologize for my internet. Really slow for.
Oh, your crash out. My information. We just broke our internet system. It's understandable. Things happen.
I was gonna make a bad joke. As well, so thoughts from that. They're trying to control us.
Oh my Lord. We're not going to talk about frogs on this channel here. This is the wrong channel here, but shout out. What a great stream. We had 6,000 people watching. Josh, I think we're ready to wrap it up. We got Jerome Powell. He washed down the charts. You got in on a great trade. Good freaking job, man. Incredible entry point. Again, gotta give you.
Look at it, dude. Let's go, baby. Let's go.
Unbelievable. Good job.
liquidation.
So good job again, man. This is what we work tirelessly as a team for you guys to keep you in the know on the latest crypto news, but also the best entries. There you go. You saw it live. Huge shout out to you, Josh. Good work, man.
Yeah, let's do this, guys. We're gonna log off here. Come join the Discord, guys. I'm gonna go live immediately in the Discord to cover this trade, which we're up now $600, $1,000 in a single trade. You guys watched it happen live on Discover Crypto. It's the other thing we do here. I put my money where my mouth is. When I lose, when I win, it's all there. So you guys can watch me do the journey. Be in the Discord. Drew, thank you for staying with me.
Absolutely, man. It was a pleasure. It was a great
Turn on the
stream.
notification.
I'll see you guys in the Discord. You guys take care.